morning, good afternoon, and good evening to the rest of you guys. Welcome to episode number 49 of Bitcoin Magazine Live. And we're going to kick things off, or I'd be better served saying we're going to blast things off with the founder of Boom, Gary Leland. Gary, thank you so much for joining us today. How you doing?
Doing great. Good to be here. Good to be here. First time on the show, I believe. So yeah, it's good to be here. Yeah, as we were talking earlier, getting old, that's what's happening.
I mean, we can pick it up right where we left off. I mean, 30, it sounds like, is the glory days from what you are describing. But
in the scheme of things, there's not a lot of difference from mid-20s to 30s. You know, it's when you start hitting 50s to 60s, that's a big damn difference. You know, just what your body does.
I got to appreciate the fact that I can still wake up in the mornings after a night of drinking. All of you guys watching and tuning in, just quick little pro tip: we're all dehydrated, so make sure you have a glass of water. We're gonna dive into some pretty heavy topics, I think, today. But before we do that, I want to remind everyone: use code YTMAG, get 10% off of your Bitcoin conference tickets. We are 29 days out. We're going to be partying it up in Miami. To be honest, like, I'm going to be in Miami in 25 days, 24 days. So if you come early, DM me. We can hang out. We'll do something. We're going to be getting ready and setting up a ton of stuff. But as always, if you find me at the conference, we can smoke a joint together, or I'll buy you a drink. Use code YTMAG, get 10% off. And Gary, talk to us a little bit about Boom. I know you're really excited for the 5th year you guys are putting this on.
Yeah, we've moved to Austin this year. So that's a new thing for us. And that's really made a big difference. We had a great conference, I think, anyway. You know, I think, I know doing our conference during COVID, 2 years ago when nobody did a conference, that made a big difference for us. Because, yeah, as I was telling you again earlier, I said, nobody sits there at home and going, gosh, I want to go to Texas in August. That just sounds like the thing to do. But I think, 2-3 years ago when we did Boom during COVID, people in July started going, wow, I haven't been to a conference all year. And they're doing one in Texas, and tickets started picking up. And then when it got to August 1st, since conference is the end of August, people finally realized they are doing a conference in Texas, and tickets went off the wall. And then once people came, for the first time, which a lot of people weren't, because like I said, who wants to come to Texas in August? Once they came, they said, this is a hell of a conference. And they kept coming back and back and back, and it's grown every year. And I think this year we've expanded a little more than I planned on. It will probably be about 500 people. I wanted to stay at about 300, but moving to Austin, everything's 3 times the cost in Austin. I mean, it's an expensive place. It's like Miami, I guess. It's an expensive place to host a conference. So we've increased the capacity. It's going to be 450, 500, something like that, to make up for the tickets. But it's going to be a blast. It's events Thursday, Friday, Saturday, Sunday. So every day there's an event. Awesome. But it's going to be good. But your conference is great to just get into that. And the thing about your conference, even when you had it in San Francisco, which is much better now than it was there, but in Miami, even if you aren't going to the conference, you could come and have a great time every day. There's so much stuff going on that sometimes I find myself having to leave the conference to go to something and then come back to the conference the same day, because there's so much stuff going on in that town during Bitcoin Miami.
Yeah, I mean, to your point, I brought this statistic up before, but last year there were 50,000 people who came into Miami specifically to attend the Bitcoin conference. However, let me tell you, attendance did not hit that 50K number. So there were plenty of people just sort of hanging out and partying in Miami. There are going to be plenty of satellite events, after parties. One of my favorite, and I'm going to share this and blast this with everyone. Shout out to Lord Eric Norris, who joined us yesterday and gave one of the best pieces of advice I had heard. If you guys are actually trying to find a job in Bitcoin, we've said it time and time again, you need to be at these conferences, but go a step further. Reach out to their marketing departments. You want a job at Gemini? I'm literally copying what Eric Norris said yesterday. You want a job at Gemini? Reach out to their marketing department and offer to volunteer to help them set up their booth. Do not ask for a job. Do not do anything else. Just offer to help them out. And then boom, all of a sudden they recognize your name, and it will help you in the long run. Being there matters. Being there in person matters. Gary, I'm curious.
Every year I go to every conference I go to, while we're on that subject before we leave, every conference I go to, and that was true this week at Unconfiscatable, someone comes up to me and tells me that BitBlock Boom was life-changing and tells me about the job they got because they were at BitBlock Boom networking. Happens all the time. So that is the truest information you can have. If you want a job in Bitcoin, go to Bitcoin conferences, especially the strong ones that aren't shitcoin conferences.
Yeah, emphasis on, and I cannot wait. We're gonna have some really cool stuff to really upgrade this show on the other side of 50. But honestly, F all of those shitcoin companies. I've been told to stop cursing, so we're gonna try my best to not drop an F-bomb on today's episode.
Oh, so I mean, I can't drop any
No,
F-bombs?
you can. You absolutely can, Gary. I have been told, like, let's tone it down. Let's be a little bit more, I don't know, polite, I guess. I don't know. The world's not polite to me, so I don't see why I have to be polite to it.
Hey, while we're talking about conferences, though, one more thing I want to say, because this
Please.
is kind of working into conferences and BitBlock Boom. This year, Consensus, which is usually in New York, and they haven't been able to have it for 2 years because it's been shut down, New York, for COVID. They've moved to Austin, Texas in June. So the Friday of Consensus, I'm throwing BitBlock Party. So I'm doing a plug here, bitblockparty.com, but it's a fuck you Ethereum party. So since the consensus is there, so if anyone's interested, I figure there's gonna be a lot of people there working for shitcoin companies, like exchanges and things that are really Bitcoiners, and they'll want to go to a Bitcoin party. So go to bitblockparty.com and you can check out fuck you Ethereum party. So that's my FU for the day.
Gary, I am so excited to come to Texas in the middle of the summer to party at the fuck you Ethereum party. Damn it. We are 11 minutes in and I already ruined it. All right. My bad, Alex. My bad. Anyways, Gary, in addition to BitBlock Boom, in addition to, making the rounds at every conference and hosting your own show, you also actually spent some time earlier this year working with some colleagues of ours, as well as some other guests of Bitcoin Magazine Live, to help write the book, Bitcoin and the American Dream. Talk to us a little bit about talk to us about that experience. What did you learn? What did you take away from it? And what did you contribute?
Well, I learned I wouldn't do that more than once a year. I mean, literally 8 of us basically lived in a duplex, both sides of the duplex, for a week. So I knew a few of those people, but that was quite an experience and quite a learning experience. We had a pretty diverse group. We had young people, we had old, me, I was a token old person, I guess. We had Black, white, Asian, female, male. So it was a pretty diverse group, but it was really pretty eye-opening as to what other groups, I'm going to say, what their thoughts are on different things compared to what my thoughts are, especially since the generation I came from, being a boomer. We had everything as we walked through the economy. I mean, we just took advantage of it and just ripped and shredded it up as we came through. So all you guys just got screwed royally by us. So, and I understand that, I truly do. But, it was there for the taking. So I guess we all took it. So sorry for everybody else, but that's the way it is. But, I learned Lamar, God, I can't think of Lamar's last name. Wilson. Him and I were roommates for 5 days. And I had our own place, basically. And we became really good friends. And it was really eye-opening as to some of the information he gave me, which I had no reason to really know before. It didn't pertain to my life. Same thing with CJ Wilson. He was much younger than me. So everybody was much younger than me. But it was quite an eye-opening experience. But the book itself, because that's more important than I think the experience of living with 8 strangers for a week. The book itself, was written for politicians, but particularly more so for their aides, or staffers, because it's easier. For instance, we had a book reveal party in Washington, D.C., and Senator Lummis came and a few people, but tons and tons of staffers came. I mean, I think we had 100 people there and they almost all were staffers. So they just like going to parties, anything they can go to for free. And they were easier to get to educate. But the purpose of the book, I think, well, CJ and Amanda are spending a lot of time in DC, and they wanted something they could leave when they're calling on politicians, something they could leave short and quick. And the whole purpose of the book is it's an hour read, gets to the point. Someone can read it in an hour, and staffers, I feel like a staffer would read it. And then when a senator or a congressman going, what in the world's going on with this Bitcoin? Who here knows something about this that can help me? They can say, oh, I know a good bit about it because they read our book, and our book is giving them what we think is the true information not a bunch of FUD. And like I said, it's a pretty amount of diverse information, because of the crowd being so diverse. So I think that's a good thing about the book. And I think it was a perfect time for the book too, because I think 2 years ago, the book wouldn't have been very important. 2 years from now, it may have been too late for the book. So that, of course, that's why it's the perfect time for the book. But as laws are going to be created to try to control cryptos or Bitcoin is the one I'm worried about it. I hope they do control and get rid of crypto. But as laws are created, we need them to have the correct information instead of people who are hoping to help out their coin by saying how bad proof of work is, for example, and we need to ban proof of work. Well, that would help them a lot, but it wouldn't help Bitcoin since Bitcoin needs to be proof of work. So this information that the book gives them, I think, is just great information.
I have to say, like, thank you for doing the work that needed to be done. And to touch on one of the things you kind of discuss it very briefly here, it is important that someone like you with your life experience is contributing, just as it's important for someone like Lamar and someone like Jimmy Song or someone like CJ. All of these different life experiences help shape what can help as many people as possible, versus I myself am a little, I don't know if perturbed is the right word, but seeing Biden about to release his executive order, a 79-year-old man who is probably not going to live out seeing the repercussions of whatever his decision is
For sure.
blasphemous, absolutely blasphemous. And I say this as candidly as someone who voted for him. Like,
well, I think the point that you really should be making is he's going to be making a proclamation or whatever on cryptos and Bitcoin. And I doubt he has any concept of what it is, even that he's talking about. Someone's prepared them, and it's according to, which side of the fence they're on as to how that's going to come out. But I'm sure he has no idea what he's talking about.
To your point, though, it's not even just which token does the person in Biden's ear have, or are they a Bitcoiner? It's also, well, they're probably tied very closely to the fiat printing machine, and they want to see that really benefit and that last longer than anything else. And so it becomes this whole, sorry, I'm going to use my second one today. It's going to be a whole clusterfuck of just whatever decisions get made over the next, I think, 18 months that we're going to have to figure out how to fix and how to manage. Gary, I'm curious, without sharing every single detail from the book, maybe one or two pieces of advice or legislative sort of nudging that you guys do to sort of guide these politicians to the water.
Well, one of the things we bring up in the book is a chapter on mining, which, let's face it, most people, especially Joe Biden, wouldn't understand what mining is or have a shot to understand mining. And as I tell people when I'm orange pilling them, you don't need to know what it is. A big chapter worked on by Charlene was the fact that Black communities have never, in her opinion, never had the chance to have the American dream. The American dream existed in America, but there was a certain class of people that didn't have the opportunity to have the American dream. And every time things started going forward, the American dream was taken away from them. And we did a lot of talking about that, which is what I was saying earlier. I wasn't familiar with all that. So that was really eye-opening. So that was some pretty important information also, especially if you were a strong liberal. You should be, to me, I don't know, I'm not a liberal, so I don't know, but you should be excited about the opportunity to bring money to minorities who have been left out of this opportunity for, well, forever, according to Charlene and Lamar. And I'm going to take their word on it because they know they've experienced it way more than me. So to me, that was one of the strongest points and one of the strongest chapters, is the fact that it brings a whole new group of people into that opportunity to have the American dream, because now they can own something that cannot be taken away from them. No one can come and take it away unless you're just an idiot and you let people steal it. But that happens to smart people too. Everybody, I mean, smart people, dumb people, a lot of people make mistakes and get stuff stolen.
Yeah, Gary, I'm still waiting for you to send me the 2 Bitcoin after I sent you one.
Oh yeah, so. I did, didn't I? I thought it was a thing where you would send me 4. I thought I just kept going.
Oh, no.
You sent me 1, I sent you 2.
Send you 1. Yeah.
Send me 4, and I'm still waiting on my 4 because I sent yours out the same day.
I'm waiting for 2. Once you send me 2, I'll send you 4 though.
Okay. I have to check. Maybe I sent it to the wrong address. I do that a lot. Send it to the wrong. I'm a boomer, so I'm gonna be sending Bitcoins out all the time to wrong addresses. Yeah.
Okay, Boomer. I do want to quickly on this topic. Like, there are two things I want to really shout out. Firstly, Bitcoin in the Hood, Kevin. If you're listening, appreciate all the work you're doing. Keep on orange pilling everyone you can. Get me those videos. Let's figure out a way that we can be working together. And then also just Cash App in general, helping so many underrepresented and unbanked people finally have financial access to fintech technology that they otherwise would never have been granted. And then making it so easy to buy Bitcoin on the app, in addition to having your direct deposit. That is, I think, setting the stage for hopefully these underrepresented communities taking advantage of this opportunity that's being given to them. Ultimately, it's their decision. Remains to be seen what is done, but hopefully these regulatory efforts can get curbed, or at least these people can be better educated about the decisions and impact that they're going to make after reading the work that you guys have done.
You know, and these underrepresented communities also have a problem that many times a lot of the people do not have the income to set up a decent retirement program. Like, for instance, they can't go to Fidelity and say, hey, I wanted to start contributing. You know, if you're working, let's face it, if you're working for $15 an hour somewhere, you are not going to Fidelity saying, hey, I want to set up an IRA, I want to set up an investment program. You might not even be able to set up a bank account. But now, whether it's $2 a week or $4 a week or $10 a week, they can start investing and saving for their future. And they can do it without any help from a bank, without any help, no fees that they're going to be paying these tremendous fees. And so that's the biggest thing about Bitcoin to me in the underserved community, is the fact that now they can take into control their retirement, which they have never had the opportunity to do before, because it just wasn't available to them. The tools or the pipeline to get in there and do it was not available. But with Bitcoin, it is available, and that makes a big difference. And if you're a young guy making $30 or $20 an hour, and you can put $5 to $10 a week, by the time you're a guy in 25, by the time you hit 65, you're going to have a whole bunch of money worth of Bitcoin, and you're not putting much in at all, less than a pack of cigarettes a week, and you'd have a ton of Bitcoin.
One of my favorite things whenever I'm trying to stop smoking cigarettes is a nice little reminder of, if I could take the 5 minutes to go smoke a cigarette, I can take the 5 minutes to just sit there and meditate with my thoughts. If you can spend the money to go buy a pack of cigarettes, if you can spend the money to go buy a 6-pack of beer, you could spend the money on a few sats and a little bit of Bitcoin.
It's just amazing to me how expensive everything is now. Cigarettes. Oh my God. When I was a kid to smoke, they were like 32 cents a pack. You know, when I was in high school, oh my gosh. And I thought that was a lot. We were trying to scrape together pennies. I can imagine. I saw them in the machine the other day. They were like $8. You know, and I smoked 2 or 3 packs a day when I smoked. So, I mean, hell, I wouldn't be able to, I couldn't afford to smoke today. I'd have a hard time with that.
In LA, where I originally am technically based or from, I mean, it's over $10 a pack, not to mention the gas prices, what they are. Here in Mexico, where I'm at now, you can buy a pack of cigarettes for $1.50.
Yeah, that's about what they should be, $1.50. You know, that the rest of that's all BS. You know, I'm just tired. You know, I know this isn't the Bitcoin subject, but I'm tired of the government, of the U.S. government, the state government, the city government in general, thinking of people as a cash producing, income producing cash cow. The government is supposed to take care of me and you and help us out and make sure we're okay, not to say, you know what, we need some more money. How can we get some more money out of all these people? You know, why is it when you drive down the street and you have your seatbelt off, why is it a $175 ticket? If I drive through a stop sign, it's a $55 ticket. Why? Because that seatbelt law came out later than running the stoplight law. So they jacked the way to hell up, because they said we might as well make some money off this deal. I'm just tired of the government making money. I'm tired of a guy getting caught in the lane, the express lane. You can't get out once you get in there. You know, if you get in there by accident, you cannot get out of there until you go down far enough. And once you get out, then if you get a ticket in there, it's like $300 or something for being in the wrong damn lane. You know, who can afford to pay that? Well, I can afford to pay, but really, there's a lot of people who cannot afford to pay a $300 ticket. That's going to mean their kids can't eat that week. I mean, it realistically is. And they got a choice. They can pay the government $300 for being in the wrong lane, or their kids can eat. Well, you know what's going to happen. They're going to get a warrant for their arrest because they're going to take care of their kids. I'm just sick of the government making money off of us, no matter how they make it up. We're not an income producer for the government. The government's just supposed to be a safety valve for us and work for us. So I'm sick of it. That's my little rant there. I'm sick of it a lot, though.
Please, you are preaching to the choir. You are preaching to the choir. We pay way too much in taxes, first off. And secondly, the government is inefficient in how they dole this money out. The laws don't make sense. Why is a law that is for your safety costing you more if you break it versus a law that can genuinely harm other people? If you run that red light or that stop sign, you're putting other people at harm's risk. You don't wear that seatbelt. That is your prerogative. That is your decision, whether or not you agree with the notion of needing to wear a seatbelt. Everyone should wear a seatbelt.
I wear a seatbelt. I mean,
everyone should wear a seatbelt.
I'm not giving anyone a hard time. I'm just saying the ticket shouldn't be triple the price of running through a red light. So it must be because it's a newer law and it can't jack up that $50 one as fast.
I don't disagree with that. I would even go so far as to say there's a secondary issue I have with government that does feed into the taxes, which is if you actually look, and I believe the exact date or the exact year was just after the Depression in 1933, 34, right around that time. That was the last time around that period where Congress took a pay cut. Ever since then, Congress has either kept their salary the same or increased it. So we're coming up on almost 90 years of getting raises. I'm sorry, time out. I pay your salary. I was never asked. I was never told, hey, no, you know what? You've done good. You've done good.
Well, that's because we're in a republic, where we pick people to represent us. So we've agreed to let people do that. But the thing about that, now you're getting me caught on that subject is,
please. We'll bring it back to Bitcoin. Don't worry, guys.
Not only do they just make too much damn money, but I'm going to use Nancy Pelosi as an example here of this person. This person, I think her husband owns the bank. She's 80 years old. What is she worth? I'm guessing here, $20 million, maybe, whatever it is. And she's hired. Okay. And she's only been a public worker. And when I was a kid, a public worker were the people who didn't make a lot of money on the street, but now she's like worth millions, owns a bank, all this stuff. She's 80. How many 80-year-old women do you know that want to go to work in that situation, that rich, that want to go to work every day and get given all the crap that she must get and have to? How many 80-year-old people? I'm not even gonna say women because that sounds like I'm saying it's only women. How many 80-year-old people that, besides politicians, do you know that like to work that hard that are multi-millionaires and if you own a bank, you're printing money. So how many people do you know over 80? And you got people like Warren Buffett, but he's not out there getting crap all day long and fighting in the trenches. He's just going to work and sitting at his desk and looking at a computer terminal, probably, and listening to some people come up and give him advice. So to me, and I'm saying, why don't we change this rules on the raises? Instead of they get more money, maybe they get more time off. Because the least amount of time they're there, the less they can screw stuff up. So if we gave them like, okay, you guys you're making $250,000 now, but we know you'll be a millionaire in a year, even though you're only making $250,000. So instead of giving you more money because you don't need it, we're just going to give you more time off. So you only have to work 1 week a month, because like I said, and then you can call them in if there's a special session or something, like we're going on right now. But for the most part, they just work so damn long. They just hunt for things to do. Hey, we need to make a law about Bitcoin, or we need to make a law about this. So let's just cut off the working time and give them more time off. They can't screw stuff up as bad. Because I don't care if they're Democrats or Republicans. I don't care. I don't talk politics because they all are the same damn thing. They're all screwing up stuff. And they may all go there thinking they're going to do good. It's just once you get into that town, you become part of the mob and you start following the group. It's just like a disease that's floating around there. So the less we can get them there, maybe they'd stay like really optimistic and wanting to do good stuff longer, if they weren't there as much.
I mean, I have been pushing, and I don't see a world unless there's some crazy executive order that gets passed. But there needs to be term limits for these people. There's no reason for you to spend.
Oh yeah.
Like Nancy Pelosi net worth, by the way, according to the internet, so grain of salt, $114.7 million. As a public servant, which she has been doing.
I was guessing at 20. Oh, I was off. Oops. I was up.
She's been in public and serving different public servant positions for the better part of 50 years now.
But the thing that pisses me off the most, and this has been a conversation that we see circulate a lot online, especially over the last year, roughly. Um, you brought up Warren Buffett. You know who had a better year than Warren Buffett in the stock market last year?
Yeah, Nancy Pelosi. Yeah,
Exactly.
sure.
How the
There's no
fuck?
law
Sorry,
against them. There's no law against them using insider information. I mean, that's a crazy thing. Also speaking on your same thing there about term limits, there's a book called Common Sense by Thomas Paine, written in the 1700s. I think it was actually written before we were a free country, saying, hey, here's what we could do, to put things up. Even back then, even before all this stuff happened, this guy said that if we do have a central capital and you have representatives going from your state to the central capital to work, they have to have term limits, because after a certain amount of time, they'll be representing the capital instead of where they came from, because they don't live where they came from anymore and they don't know what's going on in the local issues. So even this guy 200 something years ago knew there had to be term limits. So I mean, this isn't rocket science. These guys know there should be. They just don't want to lose a cash cow again. Like I said, we're providing the cash cow. That's all it's about in government now, is cash, making cash. Everybody's making as much as they can. Sure, there's probably one or two good people out there. I'm not going to throw everybody in the dumpster, but there's just so many in the dumpster that smell. When you hit the area of DC, you start smelling it as soon as you get close to it.
Look, as someone who went to college in DC, let me tell you, when the Potomac River gets warmed up a little, that city stinks.
There you go. That's probably leaking out of the Capitol into the thing there, into the river.
I don't know if you actually had the chance to read an excellent essay penned by Alex Gladstein. Sorry, I was spacing on his name. That came out just at the end of last week on Bitcoin Magazine. And we had a discussion yesterday with him over just like the hidden cost to fund wars in the age of quantitative easing. And in the discussion on Spaces yesterday, they brought to my attention essentially how our country had shifted from this idea of, well, we're going to issue war bonds, as this idea of, hey, help us fight the war. If you support America, you should buy a war bond and you'll get the money back more than you put in, whatever bullshit tagline. And it worked for generations. Your generation succeeded off of making those types of investments.
World War II, it worked. World War I, it worked. I wasn't around back then. I'm not that old, though.
You sure? I'm teasing. But it was very interesting how a lot of this changed, especially over since Bretton Woods. In particular, we stopped issuing things called war bonds, and we just started calling them bonds. But we didn't stop using that money towards funding our wars. So in essence, they essentially took out the war name to make us feel less bad about it. But ultimately, it's still being used for the same thing. And shout out to Matt Odell for bringing this up on Twitter earlier today. But the Department of Defense, same thing. This was not called the Department of Defense the whole time it was around. This was called the War Department. These are literally, our country has so many little things that were designed for us to go to war and to literally make money off of it, to profit off of it. We've seen it over generations. We've been in wars. Honestly, whether or not we agree with it, we've been in wars pretty consistently since World War II.
Yeah, like why were we in the Vietnam War to this day? I mean, what's the deal about that? How many Americans got killed over there? They stopped the draft the year I got out of high school. Luckily, my brother went to Vietnam, but what was that about? Why did we care if North Vietnam took South Vietnam? Who cares? They did. And look, nothing happened. I mean, except North Vietnam's in control now. And now we're doing business with them. Looks to me like everybody's wanting us to get into war today. It looks like all those same people are going, hey, you're at Afghanistan. You screwed us around. We need to be in a new war. We need to get something going here to make some more money. You cut us off. So that's a money producing machine, wars. And the thing, especially like Saifedean Ammous in his book, The Bitcoin Standard, brings up, when gold was the reserve, that made a big difference in war. When France was fighting England, in their suit and armors, hey, they had to win the war pretty quick. They only had so much gold until they ran out of gold and they couldn't pay the guys to be knights and stuff and fight the war. I know that's not technically the true way the knights fight in the war, maybe, but the war would stop if you ran out of money. So you didn't spend 30 years, 40 years in a war. You got it done quicker than that because you couldn't afford, you didn't have enough money. You wouldn't be able to be king anymore. You wouldn't have enough money. So that has really made a big change on war, I think, also. More than changing the War Department to the Defense Department, which is a pretty sneaky way to do that. Now we're defending you from Croatia or from North Vietnam, or, I think it does. This defending us has caused more problems long term. To me, I don't want anyone dying and being taken over, but I really don't care what happens in a lot of the world. I mean, I really don't. It doesn't affect me. Stuff's going to happen. It's happened forever. It's going to happen forever. We're not some great society where we're all peaceful people. Man, human beings like governments like taking over stuff and controlling stuff. Right now, we control a buttload of stuff, and we have for a long, long time, but it's going to end someday, and someone else is. It's just a matter, we still want to be here when it ends instead of it going out in a big cloud of smoke or nuclear waste.
Well, on the topic of what we're seeing go on in Europe, I mean, we're seeing a lot of stuff, decisions that Putin is making, conversations around how much gold he has actually stockpiled. I am of the belief and notion that he has secretly been stacking Bitcoin as well as gold, as well as holding on to whatever dollars, US dollars, that they can get their hands on, knowing full well their currency would go absolutely to the tank, essentially to zero almost. What are your thoughts on Bitcoin's place in this global conversation going on with Russia and Ukraine in particular right now?
Yeah, I could, as to whether they have any or not, who knows, but I could see where that would be a smart move. And, no matter what you want to say about the guy, Putin, he's not an idiot. He's running the country. I mean, you had to be halfway smart to get into power. I mean, so
keep the power.
Yeah, and keep the power. And he just does it in a cutthroat manner, for sure. So I wouldn't be surprised. I think the bigger question may be, which relates, is we see what's happening with Putin now that he's moved in trying to take over Croatia. So what does this do for China, who's sitting back watching? Now they're going, oh my gosh, they took him off the Swiss system. We didn't think that would happen. Or my gosh, all these corporations are no longer doing business with them. So this gives them more information to be more properly prepared if they decide to go after Taiwan. They go, oh, here's what could happen. Because I've never seen it like this when someone raided a country, that all these companies are cutting them off and things like this. This is kind of a new way of doing things. And crypto exchanges are even cutting them off now, which I never thought I would see that, not that I'm in favor of war. I just didn't think that companies that represented distributed stuff would be like getting involved in any way, shape, or form.
No, absolutely. I mean, look, we've talked on this show a few times now about the decisions of a few different exchanges to not shut down accounts tied to Russia or Ukraine, despite requests from regulators. Coinbase made that same announcement at the end of last week. However, yesterday they flipped the script and they have now shut down roughly 25,000 different accounts, Coinbase accounts tied to Russia. I mean, again, this goes back to the age-old argument that we have made time and time again in this community. Just because you do not agree with someone does not give you the right to cut off their right to speak, does not give you the right to cut off their access to their money, especially to feed their own family. We've just been talking about the idea of paying too high for a BS moving violation or a ticket that you get from a police officer. Now imagine, forget that, some other corporation in a different country said to you, no, you don't get your money. Like, no, your accounts are shut down. Sorry, figure it out.
That's what they get for not hodling on their own. I mean, how many times, who could possibly be in Bitcoin and not know that? I mean, that every conversation about Bitcoin had been said maybe for the last 10 years. But yeah, I want to know how they came up with those 25,000 people to shut down. Is it all the citizens of Russia, even the little guy who's working, just saying, hey, I want to save some money? Or is it like, did they pick 25,000 people, the oligarchs and the upper echelon people? Was there some research into these 25 people? Or is that, and is 25 people, is that all the people in Russia that have Bitcoin? Just 25,000 people? I mean, that doesn't sound like a lot of people to me.
I am actually curious as well. Like, how did you vet these 25,000 accounts? Are you sure that these aren't just VPNs rerouting an account through Russia for whatever reason? So it's no different in my mind than the Canadian government going to GoFundMe and saying to them, shut down the donations to the truckers.
Yeah, I agree. I agree completely.
Regardless of if you agree with what is being done, regardless if it doesn't matter. because it could be you tomorrow. And that's
Yeah.
what we are learning in real time. And that is the scary thing. And to Gary's point, a reminder, not get your Bitcoin off of exchanges, put it in a hard drive storage wallet, do something to get it off of an intermediary exchange. My favorite thing about Bitcoin has always been the decentralized aspect of it. The fact that it really can't be manipulated unless a majority of the network all agrees and says, hey, this change benefits us. Let's move this forward in a proper democratic way. In a proper democratic way, in my opinion.
And you can't get them to agree on anything.
That's even better. That's even better. But when you introduce these intermediaries like a Coinbase or, Cash App, Strike, whatever, you now have centralization. You now have a centralized company, a centralized entity that is going to have to make certain decisions sometimes. And unfortunately, government regulators, they kind of need to cozy up to them for a little bit. We're trying to get Bitcoin to expand. We're trying to get them to accept and adopt Bitcoin. They're not going to do that if, well, I love when Jack Mallers essentially says F you to the IMF, and I'm never going to tell him to stop doing that. But like, you're not going to be able to tell every single country, piss off, we're going to do whatever the hell we feel like it because we're going to rule the world now. No, that's literally putting a target on our backs and get ready for the worst type of legislation coming after us. I will also say thank you to Coinbase for making one of the biggest blunders towards the Bitcoin community. I don't think you will ever recover from this from the Bitcoin community's perspective. And this is great free advertising for Bitcoin only companies like a Strike, like a Swan. Honestly, I consider Cash App a Bitcoin only company despite offering stocks and equities. You can't buy Ethereum. You can't buy other shit coins on that. Bitcoin only company.
Stocks up to almost 2% today, though, so they're not hurting too bad.
Yes. Yes. Bitcoin adjacent equities for another week at least, guys.
I just think, like I said, it's been put out there so much that you have to get your Bitcoin off of there. Everybody literally should understand that by now. And if they do get their money stolen or frozen, they were just lazy because they had to have heard that information there. And it's not that technical. It seems to a newbie overwhelming to do this stuff, but it's, once you do it, how many videos do you think there are on YouTube on how to do this? I mean, like a million, more than there are people on accounts that were closed in Russia. There are more videos than that many accounts. Everybody could watch their own video on how to do it.
Absolutely. I'm curious though, because, sometimes there's almost too much information. And at what point does too much of that information become confusing for people? How do we at the Bitcoin community make things easier for the newbies to digest things and get involved from day one? What are your thoughts?
I think, well, I'm going to use an example. Swan Bitcoin, I think they're doing a good job of it. They have a lot of basic information on there, and if they can get you dollar cost averaging, you're receiving an email with some short information on it every week. I mean, YouTube is a monster. So there's going to be so much information on there that if you just search Bitcoin right now, gosh, there must be 500 million videos that come up. I mean, I have no idea what the number is, but there's nothing. I don't know anything you do that. It's just sources that are strong sources like Cash does a good job on their stuff, the Cash App, things like that are doing a good job, or Jack Mallers does a great job, as you were saying. So it's good Strike and people like that sending out information. But I have no idea how you can control that because I consume so much information every day, and there's so much that comes out every day. It's hard to consume it all. I mean, like this show's coming out.
I'm gonna add.
There's right now literally 100 people in the world producing a show right now at the same time we are, probably.
Oh, absolutely.
In one language or another. Yeah.
And it's about Bitcoin too, not to mention all the other shows about sports, politics, entertainment, whatever your heart desires, you can find it, especially in this information age that we live in today. I do want to add one to that list. And Chris, if you have the bandwidth to throw a link into the chat as well. Bitcoin Magazine has a program called 21 Days of Bitcoin. Email once a day for 21 days. You'll get a quick little lesson on it. At the very end, you'll get awarded some free sats. It comes out to, I believe, something like $20 worth of sats. So if you're a newbie trying to learn, be sure to check out that. Check out some of the stuff over at Swan or anything else that Gary had mentioned as well. Gary, I want to bring up now.
But that must be like 50,000 sats. That's a lot of sats.
Yeah. It's not chump change, guys. You don't need, look, we talk a lot about in this community, everyone should have a whole Bitcoin. Like, let's be realistic. There are 21 million Bitcoin. Not everyone in the world is going to have a whole Bitcoin.
Yeah,
There's
it's
only
kind of
there's only
hard to get a Bitcoin now for a newbie. I mean, well, it's according to who a newbie is. I mean, if you're a
Sure.
professional sports athlete, yeah, it's not that hard to get one right now. But if you're just an average person, it's going to take you a while to get a Bitcoin.
And I see it getting harder and harder as the years go on, because Bitcoin's price, as I saw a very ominous sign this morning watching the sunrise over the Caribbean Sea, an arrow pointing up covering the sun, just said to me, all right, we're starting an uptrend. Today's going to be a green candlestick kind of day.
I think it's
That's
going to
it.
be. I think you're right.
Gary, I want to touch on a little bit some of the things that I had discussed briefly with you before we dived in. And then if we can, Chris, throw this onto the screen. There is a BCA research report that I read a little bit of, and I want to share this one page that is titled Rising Risk of a Nuclear Apocalypse. And it details certain things that are going on with Russia and Ukraine that can have an effect on global markets and just, our day-to-day lives. But the thing that really stuck out to me was at the very, very bottom, in a portion that is circled in red, the risk of Armageddon has risen dramatically. Stay bullish on stocks over a 12-month horizon. Now, Gary, when we talked about this, you had mentioned, when it comes to Bitcoin exposed stocks, this is probably great and sound advice.
Yeah, just stay with micro strategies for 12 months, since that's basically a Bitcoin ETF. I mean, that's probably pretty good advice. Or marathon mining, or Riot blockchain even probably. But as I was saying, I don't know if you're talking about auto stocks, if those are a good thing. I just don't know if stocks are going to be great for 12 months. I would be cautious about that. In my household, our investment portfolio that's not Bitcoin, we split that up, my wife and I, and she's into like things you would think a normal person would be in. All mine are into Bitcoin related companies. Like I said, MicroStrategies, Riot, Marathon, whatever. I think I would be perfectly fine holding mine for 12 months right now. I don't know if she should be holding hers as is for 12 months right now. And a lot of her friends, their advisors, are telling them to cash out right now. So there's a lot of people who don't agree with them. I'm not saying they're smarter than the person who wrote the article. I'm just saying it's funny, a lot of people now getting cashed out, so I don't know. I don't know that I would go with that 100%.
I definitely am in the minority within the Bitcoin community. I come from a finance background. I still invested, as my colleague over here, Alex McShane, likes to call non-Bitcoin stocks, other shit coins. But you're absolutely right. I mean, we're going to have a new episode of Fedwatch in about 12 minutes, and they're going to dive in, especially with the potential increased rate hike next week. There was a point where this rate hike was going to be 50 basis points. And that was actually getting me excited. Historically speaking, 50 basis point or more rate hike has led to a bull market 2 weeks after the rate hike has occurred. However, now based on current projections, we're looking at a full 1% increase, which means 4 rate hikes of 25 basis points this year. I think we're in full-blown bear market territory. So I kind of agree with you of the notion of, I don't think any equity outside of digital assets. I do think something like Coinbase actually does stand to benefit just off the heels of Bitcoin. I'm not saying that that's because altcoins are going to be hot or shit coins are going to go great. I just think the average investor doesn't really realize or understand that Coinbase isn't a Bitcoin company. They think it's giving them Bitcoin exposure. So until a company like Strike goes public, or a company like Swan goes public, where you have a real Bitcoin only exchange, Coinbase, I think, will trade in tandem with the Bitcoin and broader crypto market. But the broader crypto market is always influenced by Bitcoin's price action.
Well, also a lot of people I see saying that one of the reasons the market's doing so well is because so much money's been pumped into the economy. And you got to face it, there's a lot of money in this economy. I mean, any place I go, if I go out fine dining, it's filled with 35-year-old people paying $500 for dinner, So, I mean, there's a lot of money in this economy. So if they keep pumping money into the economy, yeah, you're right. Everything's probably going to continue to go up as inflation is going. Talking about the 50 basis points a minute ago, we saw inflation. I don't even know if the way they calculated inflation back then was different back in the 80s, early 80s. But I remember we bought a condo. We were paying 15% interest on the condo that we bought. So the interest was really high back then because of inflation. And when they wanted to fight inflation back then, they didn't go up 25, 50 basis points. They went up to 16, 17% interest. So this 25 basis points, I don't even know what that's supposed to do. I can't see where that's going to do much anything to help inflation, which is what they say they need to do it for. So I think that's all just a bunch of BS. I just can't see that help. Even 50 basis points, I can't see where that would be helping inflation. Not inflation. They say it's 7.5%, but if you use the stats from like 1980, it's like 15, 16% or something. So yeah, I just don't even know what the point is.
My producer Chris and I think like a month or two ago at this point, we were sitting there late at night during our Nashville meetup, and we were just sort of running the numbers of, okay, the Fed has been pumping $120 billion of money into the markets a month for the last 2 years. 120 times 24. I'm going to try to do some math really quickly because my brain doesn't want to do it in my head.
36 billion.
2.8 billion dollars. 2.8 billion dollars that the Fed has printed, and no one has said anything. Oh, sorry, trillion. Thank you, trillion. 2.8.
I was going to say, I was trying to do the math there.
No, I divided instead of multiplied, but yes, $2.8 trillion with a T. So when we're up in arms, Joe Manchin talking to you about a $1.5 trillion package that's actually going to try to help change things, that actually is going to build out roads so I don't have to hit a pothole every time, that would actually give my dad, who owns a construction company, who's done a lot of work with Caltrans, more opportunities to submit for bids. But no, you're fine. Instead, let's pump the markets with $3 trillion more dollars. Let's boost that market up so that your stocks look good, so that your donors look good. I call BS on that. I call BS on the fact that we have skirted our eyes to the Fed's printing, but are all in on, well, Congress wants to approve this. Well, Congress wants to do that. We need to, I get it. We live in a republic. We have allowed these people to make decisions on our behalf, that the average person should not be inundated and be asked every other day about decisions being made in DC. However, Jerome Powell has no financial background or experience. I'm going to say something bold and ridiculous, and I know how ridiculous it sounds. I am more qualified to be chairman of the Fed based solely on my background. Jerome Powell was a poli-sci major in undergrad, went to Georgetown Law School, and was a corporate lawyer. His only exposure into financial markets was working in mergers and acquisitions for 6 years. Then, after 6 years of that work, did he get tapped to go and work at the Treasury because his old boss was the head of the Treasury at that point. He has no financial background, no financial really experience, and yet now he's making all of the monetary decisions for the global reserve currency at this point.
Do you think he's making all the monetary decisions? I mean, he personally is making all the monetary decisions.
No, but he has some sort of influence and impact, and I don't think someone like him should be sitting at that table.
I think maybe someone like him is sitting at that table because he does what people want to be done, rather than making monetary decisions. I think monetary decisions are made by people, and then he's one of the people that goes, okay, that's what we're saying today. Okay, got it. And then he does it. I mean, is that not possible?
That's absolutely
he's
possible.
The yes man, basically, and that's why he's in that position.
I guess. I mean, look, he's
because you're saying he's not qualified. You're saying he has no education or experience there.
I stand by that.
So what would make someone want to give someone like that job? Why would someone give someone that job? They'd have to have something, a benefit to bring to the table. So could the table be that he's a yes man?
I mean, look, he was appointed by Obama, stuck around through Trump, and is still here with Biden. Like you're absolutely right. He gets,
everybody likes him. Everybody likes him.
And the only thing politicians like more than themselves is a yes man who gets things done for them.
Does what they want done.
Exactly.
Yeah. So I mean,
Exactly.
everybody likes him. He probably still be there next president comes. Everybody likes him. He's like,
Oh,
oh,
I
we're
hope
changing
not.
courses now. Sounds
I,
good to me. What we doing now?
I really hope not.
Because you just know there had to be a big difference of basic thought patterns on handling monetary problems between Obama, Trump, and Biden. I mean, they had to change drastically, and he's still plugging along.
Absolutely. No, you're absolutely right. Like, why do three different presidents who all ran on very different financial platforms, different promises to people about what they wanted to accomplish? I mean, mind you, Obama did not name him chairman of the Fed. He appointed him to a federal bank and made him essentially qualified to eventually become chairman of the Fed. But even
That was the test run.
exactly. You didn't fuck up bad enough. Sorry, Alex. You didn't mess up bad enough, but here you are. You know what? We're going to keep promoting you. I used to joke only in Hollywood and sports, and honestly, maybe even politics, the only type of jobs where you can get fired and somehow end up with a promotion.
Well, it's like I said, it's the only job that you go to work for a year and you become a millionaire. Is being a politician. Really. I mean, is there anyone in the Senate or Congress that's not a millionaire would be a question, or a multimillionaire? Because $1 million isn't a lot of money in DC. Everything's expensive as hell. But I don't think there's anyone who's just a millionaire even. I mean, after a year or two, they're all multimillionaires, no matter where they came from. So they're getting that money from somewhere. That's just crazy, They need to start giving them Bitcoin. They need to start asking for Bitcoin so that they can start understanding it and hodling it.
Would you prefer individual politicians to have Bitcoin, or would you prefer the Fed to adopt some sort of a Bitcoin hold in their own account? You can only have one.
I'd prefer the politicians have Bitcoin because somewhere there's telling the Fed what to do. I don't, there's a lot of input coming from there onto the Fed, but it's like people say, which is a little off topic. You hear all the time, oh, United States needs to start mining Bitcoin. Why in the hell would they mine Bitcoin? They can just print as much money as they want and just buy the thing. I mean, they don't have to spend time mining it. That's BS there. They can just print all the money they need and just buy it and buy it and buy it. I mean, which I'm surprised that they don't just buy it and buy it and buy it. What's it going to hurt them? They throw away more money than that a year. I mean, they just piss away more than millions and millions and hundreds of millions of dollars, billions of dollars. So you would think they go, hey, let's just buy $1 billion worth of that Bitcoin just in case,
I've said, and it has not been well received, but I would have loved to have seen them print $120 billion a month and just stack sats with that.
Of course, since you own Bitcoin, you'd love to see that. Of course, I'd love to see that too. Any Bitcoiner would love to see that.
Hey man, I own plenty of equities too. I made some money with them pumping the equity market. So thank you, Papa Powell, for taking me to a new tax bracket in that regard. Gary, as we wind down, I want to ask you, you will be in Miami in just about 29 days, correct?
Yeah.
What are you most
staying
excited?
On the beach? I got a place on the beach there. I got it like a year ago when prices were cheap.
I love that. What are you beyond just hanging out at the beach? I'm going to find you and we're going to post up and have a drink at the beach. But what are you most excited for?
I'm at a lot of just like last year, I spent a lot of time out at the Swan Dome. I don't know if they've got a dome this year or what's going on with there, but I spent a lot of time out there last year. I'll be at the Fold party. I'm sure they'll have one. I'll be at the Unchained Capitals party. I mean, I'll be at a lot of parties. I like going to parties. So, I do like that. I guess saying it's harder in the mornings now that I'm
Gary, almost
was when I was 27, but still I can party all night. I just can't handle it the next day as well.
You're almost putting me to shame. I'm like trying to avoid all the parties and after parties. I might even try to like not drink for the sake of being able to wake up early. I mean, we will be working, but what is work when you're surrounded by fun at the same time? I'm excited to be an adult Bitcoin Disney.
Last year, first day I went to the beefsteak and I didn't drink there. I do have to admit. I said, I gotta like make it through one day. I have learned one thing in 67 years is you can't like first day already be in the hole and feeling that bad. You gotta like make it to the second day at least before you're feeling that bad. So
I wish you
tried not to party too heavy first day.
I wish you had given me that advice before my spring break senior year, because let me tell you, I went too hard on day one and had to sit out day two.
Yeah, that's what happens to people, and then they can't. Oh, then you're starting in the hole. It's like going all in at the poker table, and then you lose, and you got not all in, but everything but $5. And now you got $5 left, and you're working all damn night just to get some money back. That's the way it is. If you party too much first night, you're spending all week just trying to recoup.
Man, but if you hit on that hand, shout out to my homie Samir. And unfortunately, the coin flip at the Super Bowl was not tails. I'm sorry, man. It sucked. Tough way to start, but thank you, OBJ, for making up for that lost bet.
50-50 bet. That's a tough one to go with there.
We were feeling cocky. But hey, we made that money back and then some. Thank you, OBJ. Sorry for your injury. Before I leave you, I do want to ask for, if you don't mind, potentially sharing a price prediction by end of year this year.
I'm still thinking that Bitcoin was just slowed down on its march to 100,000. I'm not a price predictor, but I think it was just slowed down on being 100,000 by the end of last year. So I would not be surprised to see that, but I'm not saying that it is, since I'm not a price predictor or a chart analyst. I just watch videos, and nobody's saying that. That's just what I feel. It's not like I see a lot of people saying it. I just feel like it should have done it last year. I think it's everybody would agree. It was almost everybody was thinking at the beginning of last year that we would hit that by Christmas. So I'm thinking that it was just slowed down by China and different things that happened. But I'm probably wrong. It doesn't matter. I'm not selling it. So
no, I mean, look,
it's all viewpoint. I mean, I don't think we're talking to a bunch of people that are saying, "Oh, good, I can sell it at the end of the year."
No, I think it's more so we can have a little bit of a victory lap at the family dinners or get-togethers with your old friends. I myself definitely laid claim to that 100K by the end of last year and was disappointed to not see us break above that. I am curious, though, to see what more use cases come out of the Bitcoin space, how it will be shown and highlighted on this global stage that it finds itself in.
I think that when it starts moving, the last two times it's gone up into the 60s, it did it quickly. I mean, it did it like overnight. I mean, two Christmases ago, it went from $8,000 to $25,000 Christmas Day. I mean, when it moves fast. So we're at $40,000. If you put it into perspective and just use that Christmas, in the matter of 25 days, it went from 8,000 to 25,000. That's tripling. So tripling by now to Christmas is not something that's impossible to do. I'm not saying it will happen, but it's not possible. But I think it's time for it. I know that makes no sense, and that's no reason. I just feel it's time. But doesn't matter. I'm not selling whatever happens. I've done too well on the drop. I actually hope it drops again, before it goes up there. I mean, I'd like to see it get down to like 3,500 again. I would be tickled pink. I've done everything. I mean, I've seen that happen when it went up to, huh?
Sorry to interrupt. I would say I would love a quick flash sale of 3,500 Bitcoin.
Yeah, 4,000 would be nice. I mean, people go, "Oh, don't watch out what you wish for." But the last two times when it dropped from 20 to 35, I was real happy, and then it dropped again during the economy busted, and it dropped down to there when COVID hit. It dropped down to like $4,000 again.
Yep.
And I was real happy again. So hell, I don't mind it dropping again, to be honest with you.
So talk to me a little bit about your mental state in those moments, because I myself come from like a growth investing standpoint. I was always taught and trained, you don't buy a dying stock, you buy it breaking out to new highs. It's taken a lot for me to really understand the Bitcoin buying the dip and like buying into this sort of philosophy, which I do heavily now. But talk to me a little bit and share with us sort of what that was like those first few times you were doing it. Were you uncomfortable? Were you just very like, yes, this is a sale, let's go?
Well, first time was 19 or whatever, 35, 36, whatever it was. I was I'd only been into Bitcoin a year, but I knew I wasn't selling. So I didn't sell because it was 19. I held on to it. But I would say that was kind of different because I held on to it and just was buying more as it went down. I wasn't like during the COVID, when COVID came and it dropped down under 4,000, that was a whole different story. I was buying my ass off. I was trying to find money to move money to buy, so I was buying, I bought at 6,000, I bought it 5,000, I bought 4. I mean, I was just buying it all the way down. So I'm very comfortable with that. But I think that has to do with how well you know the product, or how well you understand Bitcoin, or how well you realize Bitcoin can't be killed, whatever it is. And I'm also in a situation, a financial situation that not everybody's in, where, I have made a good living my whole life and I still make a good living. So it's a different situation for some people. And I'm old, so I don't go to work, and federal government gives me $5,000 a month, Social Security. So, I mean, this is the greatest thing that's ever happened. They just hand me money every month. That's just, when I was in high school at that age on, when I first started working, I always said, this is BS. I'll never get this money back. But now I'm getting it back, and it's a perfect time because I can buy Bitcoin with it. Matter of fact, we weren't going to get Social Security till I was 70. I said, we need to get it as soon as we can so we can start buying Bitcoin every month. So I don't know that I have an answer as to my beliefs in that. My personal belief is that Bitcoin's not going anywhere, it's never going to disappear. So it's a no-lose situation. And when you can get Bitcoin for under $4,000, you need to be getting as much as you can. And the last 2 or 3 times it's dropped there, that's been truer than you can believe. Even at $10,000, it's a good deal. Anything's a good deal. In 5 years, you aren't going to care what it is. You're going to say $40,000 was a good deal. I truly believe that.
No, I mean, look, I kick myself for not buying as many as I could at any price point below 20K. I mean, maybe we never see a price below that again, or maybe we will for a quick little flash.
I don't think we'll ever see below 20K again, but I could be wrong. I thought it'd be 100 by Christmas. So it shows how much I know. So it shows them. But I think that 20K would be hard to see. I think the problem is like, you can't sell all your stock in General Motors and watch the market drop and then buy it back the next day. And that's the problem with Bitcoin. It would be nice if there was some kind of law on that. You couldn't sell your Bitcoin, see the market drop 20% and then buy back the same amount of Bitcoin and more. I mean, because I don't have a problem with some regulation, because it's going to happen. I mean, whether you want it or not, it's going to happen. So you just got to make sure it's a regulation that doesn't kill Bitcoin, and set it back. It's not going to kill it. You could just set it back. Let's face it, I'm 67. I can't wait 20, 30 years. I'll be at the old folks home with my jewel cup. We got to get this thing moving here.
To quickly unpack what Gary's saying, for those of you who aren't as familiar, the wash sale rule is a law that's implemented in stock trading, where if you sell a stock for a loss, but buy it back within a 30-day window, you are still not entitled to call that loss as part of your tax returns at the end of the year. That law does not exist in Bitcoin. So if you take a nice bath in Bitcoin, you could, in theory, sell it for a loss. That loss now shows up on your tax returns, but you can buy at this low price anyways, and then watch it rip and keep holding. So not financial advice, not tax advice, just explaining out exactly what Gary was explaining in detail. There was another thing I want to unpack, which is, while you may have said when you were our age that you weren't going to get Social Security, we are very much of the mindset that we are not going to get Social Security.
Yeah, I understand. I've been there, done that.
I
thought that my whole life.
What would you do? Like, what steps were you taking to help yourself when you were a young man, not too long ago, trying to, hey, I'm losing this money in Social Security. I'm paying an arm and a leg in taxes. I only have a few fingers to save. How were you doing it when you were early on, for maybe some advice for some of our viewers?
Well, and things change over time. I was doing companies that I worked for, but I put away money in just general investments and funds. I'm not a great stock picker. I never was. So I'd use a company to handle that for me, but I bought real estate, homes, rental properties, things like that, had still got some gold in a drawer. I figure that might be handy if I have to exit, the country. Don't have a lot of it, but if I have to take off and get across the border, a little box of gold, I don't have a box of gold, mostly box of silver, might be helpful to get across the border and get the hell out of Dodge. Who knows? But, I don't have any great advice there. I just worked hard and saved money, nothing special. Nothing that people can't do, except right now, people are getting killed, as I said earlier, with inflation. It's harder to do. I grew up at a good time. You can buy a house put it on a 15-year loan, and it wasn't that impossible to do. We were talking to my daughter the other day. She's been saving money for 20 years to buy a house, and they're going up so fast that she's getting killed by inflation. She's really pissed. So she's been saving. When her and her husband get located, they transfer a lot. When they get in 5 years, when they get stationary, shit, they're going to have lost a lot of their value they could have had in a house. She's real upset.
What, given your daughter's situation, like what advice do you give her? Do you urge her to maybe prioritize Bitcoin, or do you view something like real estate still as a viable investment for our generation?
Well, I still think real estate's a viable investment. There's only so much land. I mean, it really is. With rental properties, so gosh, it's such a pain in the ass. I mean, you got to kick people out. They don't pay rent, and then they mess it all the hell up if you got to kick it out. But land, I mean, there's only so much land, and it seems to have always been going up over history. So I don't know. Land might be a good investment for people, but I'm not a big investment advice person to give out investment advice on that. Like I said, I've just worked hard and just saved my money like idiots have. But I grew up at the right time, being a boomer. I grew up when there was a lot of money and a lot of money to be made, and the government wasn't that much killing our ass like they are now. The government was still trying to help people out for the most part. If I was I definitely think if I was a vet, I would get a house while the government is giving you that kind of interest rate. I think you'd almost be an idiot not to, so I don't know much about that either since I'm not a vet.
I want to give you the opportunity very quickly to, let our viewers know where they can find you, where your podcast is, or where they could buy tickets to BitBlock Boom. But before that, I have to very selfishly shout out my Denver Broncos for, during this segment, trading for Russell Wilson, especially after I cried a tear when they didn't sign Aaron Rodgers. So maybe you guys aren't incompetent, but shout out, Broncos are back, baby. Let's go. Gary, where can our audience find you? Or buy a ticket to BitBlock Boom?
Yeah, bitblockboom.com and then bitblockparty.com that we talked about earlier. Then I'm Gary Leland on Twitter, Gary Leland everywhere except for Instagram, where my people who have cloned my accounts have more followers than I do. So it's amazing how they cloned my account and then they have more followers than I have. I guess I don't work Instagram. I'm not a big Instagram guy, so I guess that's why they're able to get so many followers. That's kind of amazing. All these people that just make a fake account through your account, That's Gary, I had to cut you off. You kept messaging me, wanting me to send you money. I go, really? Do you really think that was me? I mean, really?
You're not wrong. I actually this morning was followed by what I quickly realized was a fake Preston Pish account on Instagram. And then I was like, how does this guy have 10,000 followers? Like, I don't know. But guys, as always, do not send your Bitcoin to people who promise you more Bitcoin in return. Please do not do that. Not your coins. Like, take them off exchange. I'm spacing on that saying that we always say in the Bitcoin community. Gary, this has been so much fun.
Oh, I've enjoyed it.
I'm looking forward to meeting in person in Miami, and I hope I can convince CK Snark down there to let me.
There's CK. Hey, CK, how are you?
I'm gonna try to make my way down to Austin as well. Let's party it up and say F you to some Ethereum heads.
Yeah, you should. We're gonna have a good time saying F you. CK had one of the best parties on his rooftop. Actually, that party on your rooftop was life-changing for me, CK. I got to tell you that. It's been a while now, but that was the life-changing party.
Yeah, no, it was definitely an awesome party on the rooftop for Bitcoin 2019. And to anyone on the fence of Bitcoin 2022, so life-changing parties will be happening there as well. So
all day,
you gotta go
all day long. Even after it's over, there will be.
Use code YT.
You need to get your butt down there. Get your butt down there. I can tell you right now, you're going to miss more than you know.
Yeah,
I know experience.
I know Gary is rolling in deep with the whales, so he's going VIP.
Yeah, I think I am. Oh, I believe my wife and I are even coming. My wife's even coming. So I know I'm probably taking you over time too, right?
No, Gary, honestly, you are welcome to come back anytime and we can chat for hours on end. This was an absolute blast. I loved our political rants together and our conversation about Bitcoin. I am going to kick it to a commercial break because I myself am excited for this new episode of Fedwatch, especially given all the conversations going around these rate hikes, Curious to see what Ansel and the team have to say. We're going to cut to a quick commercial break. Gary and CK said it best. You need to be in Miami in 29 days. Use code YTMAG, get 10% off. We'll be back after this short commercial break.
Bitcoiners, welcome back to another episode of Fedwatch. This week, I am really, really honored to bring on someone that we've actually wanted to bring onto the show for some time now, and he has graciously accepted to jump on, Mr. Luke Gromen. Luke, this talk was inspired because Bitcoin Tina, of all people, tagged me in one of your threads and said, you need to get Luke onto Fedwatch. And in that thread, you were talking about potentially why the US might get into Bitcoin. Before we get into that, I want to jump into, an introduction of your role into the space. I know Ansel has kind of put together a little bio. I'll pass it to him and then we can get to you.
Sure. Yeah, Luke, nice to meet you. You are the founder and president of Forest for the Trees, and you are a macro expert. There's so much going on in the world right now. Bitcoin's a little bit quiet, but it seems like, outside of the headlines, but, your expertise is what is, really taking up a lot of the bandwidth right now. So we're lucky to have you on the guest. Welcome.
Thanks for having me on. It's great to be here.
All
So
right,
I guess,
yep.
I guess, Luke, before we jump into this kind of scenario you teased out on Twitter, why don't you introduce yourself, talk about Forest Through the Trees and your kind of high level introduction?
Sure. So I'm founder and president of FFTT. We're a macro thematic investment research firm that aggregates a large amount of publicly available data in a unique manner, trying to identify developing economic bottlenecks in different sectors and macroeconomically. And something we've been spending a lot of time on over the last really 8 years at this point now has been viewing this ongoing systemic change, the ongoing systemic change that is driving increasing pressure on Western financial and fiscal positions at the sovereign level, in particular, the United States. So we spent a lot of time around that. When you're talking about that it bleeds into a lot of different branches of macro thematic. Energy, debt, etc. So it's that's the 30-second version of who we are and what we do.
Awesome. And I mean, that's really what we like to talk about on this show. It's the macro show that ties in Bitcoin. But Luke, speaking about these thematic macro kind of threads that you look into, this thread that you dropped on Twitter was very, very interesting, and you kind of tease out this scenario where Russia has cornered the gold market, and that in today's world where there is digital gold in Bitcoin has left the door open for the U.S. to potentially weaponize gold in response to the fact that Russia and maybe the BRIC countries are leaning on gold. Can you talk a little bit about this? And you've historically been quite a gold bug, and I'm kind of curious overall, like how you started thinking about Bitcoin in the macro sphere.
Sure. So to me, I think there's two big misperceptions in macro today. I think big misperception one is that the real value in the system is the dollar. The real value in the petrodollar system is the dollar. And what I think Russia's doing is the real value is the oil, is the petro. And the other big, I think, misperception, I wouldn't even say it's a misperception, it's no perception virtually, is that for 50 years, really 40 years, I suppose, 40 years, investors have not had to think about the United States sovereign balance sheet at all. Deficits don't matter. The debt doesn't matter. We've heard all of these things over and over. There have been changes that have been steadily accelerating really since the great financial crisis, accelerating more over the last 8 years. It means the US debt actually matters again. And it's a dumpster fire. The US sovereign balance sheet is a dumpster fire, and to be kind. And there are others that are in a similar position, some with worse banking systems, et cetera. But in the end, the dollar is the reserve currency issuer. The US is the reserve currency issuer. And so you're in this unique historical time where the reserve currency issuer sovereign balance sheet is in very poor shape. And so that, I think, these two factors, that energy is the real value, not the dollar, and the sovereign balance sheet of the United States are really being weaponized by, I think they're part of what has emboldened Russia to do what they've done, knowing that the balance sheet of the United States cannot withstand the loss of Russian energy from global markets. And so I think that is really the genesis of this thread that I would put out, I think, shortly before Russia actually invaded a couple weeks ago. I think that's what's really emboldened him to act. And so that's, I think, sort of where we are in terms of where it ties into Bitcoin. To me, there's been this ongoing move in the system away from treasury bonds as primary reserve asset toward gold. At the global central bank level, at the sovereign level, at sort of the rule maker level, if you will. And in the last, call it probably 2 to 3 years, have done a lot more on Bitcoin as it's when you look at the factors I describe. In a word, they're terrific. They're hugely fundamentally bullish for Bitcoin as a neutral reserve asset for the people, as I think I called it 2 or 3 years ago. Personally, I've actually owned it. I first bought Bitcoin in late 2013. In fact, I saw it the other day. It was, I bought 10 Bitcoin at I think $7,000 or something, right? Which you look back and you laugh now and you go, oh, had I only kept it all. But I've owned it, a little bit of that, straight through. So I've always just kind of kept an eye on it. I never dug into it a bunch. I spent a lot of time more on sort of the macro side, and then that developed to the Bitcoin side, as opposed to starting at the Bitcoin side and developing into the macro.
So, Luke, what would you say those misconceptions are? They like attached to the post-World War II U.S. hegemony, the U.S. liberal trade order, and which comes first? Is it the the realization that those misconceptions are there, or is it that the post-World War II era is ending, or which is it there?
I think Eurasia, broadly speaking, Europe, Asia, Russia, the Middle East, India, broadly understood that the post-war neoliberal rules-based global order, however you want to phrase it, I think they all understood that it ended with the great financial crisis. And you can see this in terms of central banks starting to buy gold again for the first time in 30 years, every year since 2008. You can see it in terms of the response, for example, of, say, Russia in 2014 when oil crashed and everybody said, okay, Russia's going to sell all their gold. And what Russia do? They kept buying gold and they sold all their treasuries. The Saudis at the end of 2014, everybody said the Saudis are going to wield the oil weapon, and choke off Russia. And they didn't. They wielded the oil weapon and choked off U.S. shale. And so there's been lots of hints along the way in terms of the development of, or pointing to, Eurasia realizing this already and preparing for it. Along the way, the U.S. has been fighting it. And I think what Eurasia has been trying to move toward has been a multi-currency energy pricing with trade imbalances generated in commodity and energy trade, netted out against real trade, and then any deficits or surpluses, depending on which side you are, left over at that point, settled in gold at a floating rate in all currencies. And it's a system that has been advocated for since early 2009 by the People's Bank of China, the Russians, the Europeans, arguably since at least 1999. Really, if you go back in history, you can find them talking about this in 1974. So there is this broad Eurasian support for a system where oil is priced in multiple currencies. Everybody gets to print money for oil, not just the Americans. And then deficits are settled in trade first, and then secondly in gold at a floating rate in every currency. And basically, this is the Bancor system that John Maynard Keynes advocated at Bretton Woods and was overruled by the Americans on, a version of that at least. In fact, the Chinese specifically cited Keynes as Bretton Woods Bancor in their 2009 missive with the BIS asking for a new system. I think in America, we've been a lot slower in getting the joke due to dogma, hubris, the benefits we've gotten from it. I think up until COVID, you would have, I think if you asked the average person in Washington, maybe 1 in 100 would have realized what the U.S. military has been warning about for well over a decade, which is that the dollar is no longer an exorbitant privilege on net. It is an exorbitant burden. Post-COVID, I think we went from 1 in 100 people in Washington understanding that to probably 10 or 15 or 20 people in Washington understanding that. So we're nearing a quorum, if you will. And I think the key catalyst to that was the U.S. military had been complaining about the risks to U.S. supply chains for a decade. We can't fight a war against China, which is silly because you're telling us our primary adversary for the next 2 decades is China. And nobody listened. Virtually nobody in Washington listened. Post-COVID, people started listening because it went from, hey, this pie in the sky, if China's our adversary in 10 or 20 years and we're dependent on China, it turned into, we need masks. Okay, call China. And China says, piss off. I'm not giving you the masks until I get all the masks. And that was the point that everybody can sort of understand if you're willing to listen. And so I think there has been this progression from 2008 where Eurasia at a senior level understood the needed for change. You can see in their actions and in the words, the desire and need for change. Washington fought it by and large. Washington is starting to change, led by, I think, the defense and certain circles in the intelligence community that sees the need to basically move to a system with a neutral reserve asset, whether that, a gold is where it appears to be moving at the moment, given what you're seeing in terms of central banks, et cetera. But there's no reason something like there's no reason that Bitcoin couldn't theoretically fulfill that role, whether it be an official level, which doesn't look like there's any momentum for it or minimum momentum for it now, or at a de facto with the people role, if you will.
Yeah, so that kind of brings back to the original thread that spurred this conversation, and Russia being able to corner the LBMA and the COMEX and all that. Can you walk us through what we would see if that were happening? And a lot has happened in those 2 weeks since you made that tweet thread. So is that still looking like a possibility?
Yeah, the tweet thread was really just pointing out that it's not well understood and sort of, and talked about in polite company, but I'm from Cleveland, so it's that doesn't apply to me, I guess. But what in sort of the polite finance circles in the financial money centers, it's not well understood that the Achilles heel of the dollar system as it's been structured since 71 is the unallocated gold markets, centered in London primarily. In other words, COMEX has a lot of leverage, but it's a futures market, right? So there's buyers and sellers. There shouldn't be any real imbalances. In London, there's this unallocated market where it's just unallocated promises of unknown magnitude against a pile of finite gold reserves. And so right now, the oil market's about 20x bigger than the physical gold market in annual production terms, let alone all the gas market on top of that, let alone any other commodity markets on top of that, which have all gotten much bigger in the last couple of weeks, but we're getting bigger on a relative basis anyway. And so the point is that if you wanted to force, it's effectively, again, theoretically possible. As Yogi Berra said, there's the difference in theory. There's no difference between theory and practice, and in practice there is. But in theory, if you look at the size of the oil market, how little gold there really is at these places, you can basically run a version of what the Hunt brothers did in silver in 1980. And while the Hunt brothers were able to be shut down in their initiatives based on a changing of the rules by COMEX, legal/regulatory pressure, brokers cutting their credit lines. Brokers cutting their credit lines for Russia is the world trying to shut off Russian oil. If you have to stop consuming oil. The problem with stopping consuming Russian oil is, as we're seeing, we're in a supply-demand scenario for oil that's not conducive to doing that without causing a super spike in oil, without causing a recession. And a recession with Western sovereign balance sheets where they are not a possibility without the Western sovereigns either defaulting on their sovereign debt or their central banks printing money to cover the difference into that energy super spike. And so I think it ties back to this point of exploiting these multiple systemic weaknesses that have developed over time. Like I said, there's no theoretical reason that couldn't happen. How does that end up impacting the dollar is pretty straightforward. It's basically gold competes with treasuries as the primary reserve asset of the world. And again, not talked about in polite company, but I'm from Cleveland. So the reality is that global central banks have bought 3 times more gold than treasuries since 2014. So this move is already afoot, but gold's not big enough to serve in the role it would need to be. If Russia or somebody else made gold big enough to serve as a neutral reserve asset, that would begin to supplant future demand for treasuries, which would then throw back the need for financing the U.S. deficits, which are structural, growing, and they're going to get a lot bigger. They'd throw them back onto the U.S. And at that point, the U.S. faces a choice: finance them themselves. We don't have the balance sheet without causing recession, slash spending. And really, when you look at what U.S. is spending money on, just Treasury spending, entitlements, and defense are 120% of tax receipts, and tax receipts are all-time highs. So you'd have to slash some really big line items and very politically unpopular line items. That's not going to happen, or the Fed's going to print the difference. And again, that gets you back to this sort of Fed printing the difference into an inflation spike. And so when you look at these terms from a big picture perspective, it seems pretty clear to me that sort of the big picture game, the meta game that is being run by Russia, I think supported by China. There's a lot of evidence now that it's supported by China versus a week ago, 2 weeks ago. that it's basically, in a way, forcing this system to change. And so that's sort of I think the dynamics, at least you can kind of see where the pressure points might lie and how they might unfold if something like that were to happen.
So given all that, are you surprised that the dollar's performance over the last week? We've seen a huge rise in DXY, so relative to other large currencies. And, obviously it's fallen against gold, but it has risen against other currencies. And so, I don't know, I just kind of look at that as it's getting less multipolar actually in currencies, right? If the euro goes under because of all this, or that there's stresses in the euro system, then the dollar just grows. And I can see a final showdown between gold, Bitcoin, and the dollar, or something like that. So can you talk maybe about DXY and what you think about that?
Sure. Yeah. To answer your question, I'm not surprised that DXY rose, right? Because it's been the funding currency. You've got this giant euro dollar system where you've got dollar denominated loans. And so anytime you're going to get economic stress, the DXY is going to rise against, as a practical matter, it's the euro and the yen. With that said, the dollar has collapsed against oil. Everyone was kind of high-fiving, look, the ruble fell 50% against the dollar. Not a lot of people high-fiving that the dollar fell 50% against oil in the same time horizon. And this gets back to this point I made before, which is the real value in the dollar system is not the dollar, it's oil. So there's this is the fundamental disagreement, which is the Americans say the dollar's the value, and look, the dollar's going up. And the Russians are saying, no, it's oil. The oil's going up. And that's ultimately why Eurasia wants to move to this multi-currency system, right? Because if the dollar's the value, the Americans have all the power. If the oil's the value, then it's a more balanced system for everybody else. In theory, DXY could be at 200 and there'll be gasoline shortages in the United States. We'll be standing in line with guns waiting for, for fill-ups, right? Because oil, there won't be any. And so that's almost an extreme example, but extremes inform the means of, is the dollar rising or is the dollar falling, and where's the real value? You're seeing it all over right now. Countries are shutting down exports because they're afraid of not getting supplies of commodities. You have the financialized America and investors saying, look, the DXY is rising. We're still the kings, while the world is sitting around dumping dollars to buy wheat, oil, gas, palladium, nickel, gold, silver. What's the real value here? And so I think there is this, again, it's really just two polar opposite views. And I think really what Putin and China are trying to enforce is, as the creditors of this system, is look, no, the dollar isn't the value. I don't care if the DXY is up. Oil's the value, production's the value, and we want to be paid commensurately. So I think I think we're watching in real time this fight between these two worlds of financialized world and real world.
I think that's really interesting. And, a lot of people in the Bitcoin space, Parker Lewis wrote an excellent article titled Bitcoin is the Great Definancialization. We look at mining as kind of this thing that ties Bitcoin to reality and production a little bit more than what the current system is set up to be, and kind of transitioning out of, what we're seeing immediately and zooming out a little bit. People have been talking about this is the end of the World War II, post-World War II kind of era. The US dollar hegemony is over. These sanctions are exposing, the lack of ownership within the existing dollar system, which brings into question, what is real value today, and the dollar kind of losing trust. Can you talk a little bit about, what happens next? Is Russia and China's kind of call on this system, does that bring down, the second best? Does that bring down Europe? Like what's that like next step? It seems as though you've been able to kind of be on top of things. The thread that inspired this is now prophetic 3 weeks later. So I guess what happens next year?
Well, I think, and this ties into Ansel's point about, I think ground zero of what has already transpired is Europe, right? In terms of energy costs and economic collapse, right? I mean, you're seeing hyperinflation in energy costs, full stop. I mean, energy costs, electricity costs in Italy are up 50% in the last week. You know, I don't know how many months in a row you need that to happen, but the IMF definition is 50% a month of something for hyperinflation. So you are, in the very short run, at least, seeing a hyperinflation in electricity costs, gas costs, nickel costs, palladium costs, a lot of different things in Europe. And production is not going to be able to be sustained. Margins are not going to be able to be sustained. Consumer spending, et cetera, in Europe. Now, back in 1998, when I was, 3 or 4 years into this business, Russia defaulted, and within a month, with the world much less levered, demographics much better, China nothing but an emerging market backwater, oil at 20, not 120. Within a month and a half, the financial system nearly collapsed through the link of long-term capital management. It required a Fed bailout orchestrated by Wall Street. After a relatively irrelevant Russia compared to today, particularly since they weren't paired with China, collapsed or defaulted, excuse me. So there's this view, and I see it almost every day. It's like, well, the Fed was talking about it this last weekend. It's just Russia. And to me, that is just so misplaced. You're already seeing the contagion in Europe. The contagion in Europe is going to spread to European banks. I mean, I saw a headline, I tweeted about it yesterday. Deutsche Bank said, we've significantly reduced our Russian exposure. I'm like, no, you haven't. I mean, unless Deutsche Bank has no more Deutsche customers who are buying energy from Russia, which is inflated by 50 to 100% in the last month, you still have a lot of Russian exposure. And so there's this wishful thinking / lack of second derivative thinking, or inappropriate first principles thinking, however you want to define it. There's going to be a contagion, and you're going to see in the European slowdown. Then you'll see it in European banks. The European banks, listen, the American banks are in great shape. They are. With that said, you're going to see shoot first, ask questions later, because I've got 30 years of experience, 25 years of experience. Like, when you have a banking problem somewhere, it ends up being a banking problem somewhere else. The only question is how long. You'll see stocks taken out here. You've already started to see that. I think it will get worse. Stocks drive marginal consumption in the United States. They drive marginal tax receipts. And I think ultimately where this goes is this dynamic that nobody's looking at is the sovereign balance sheet side. If tax receipts start falling, when you can't even cover your treasury spending, your entitlements, and your defense, let alone everything else the federal government spends money on, with tax receipts at all-time highs, inflated by 12% nominal GDP growth last year, what are you going to do? You're going to have a choice. You're going to have either slash defense spending in the middle of a showdown with Russia. Nope. You're going to have the Treasury come out and say, effective next month, we're going to only make every other interest coupon on treasuries, and we're going to cut all Treasury stimulus effective immediately. Nope. Because cutting the stimulus will make GDP fall faster, make tax receipts fall faster, which will make your problem worse, not better. Or you say to baby boomers, 7 months before an election, starting next month, we're going to start skipping every other month on the Social Security payments. Nope. Or you're going to go to the Fed and say, yeah, I know oil's at 125 on its way to 140, but you're going to finance the difference. That's what's going to happen. That's what's going to happen. And 99% of Wall Street is going, there's no way the Fed's going to loosen into a inflation spike. They're not going to have a choice. And this is the big, not even misperception, no perception. There's nobody doing any real work on the sovereign balance sheet of the United States. There's nobody doing any real work on the balance of payments of the United States, because it hasn't mattered for 50 years. It matters now due to some of these other things we're talking about, and these actions that Russia and China have simply taken what was inevitable anyway, and brought it forward in a big hurry in an election year, which only puts the pressure on them.
Yeah, you mentioned Deutsche. I saw a story about Credit Suisse and how they are exposed to Russian CDS. So, I mean, that those European banks, they're in such a bad position, exposed to Russia, exposed to these credit default swaps, the weapons of mass financial destruction. I am very, very bearish on Europe. And that's why I'm somewhat bullish on the dollar at this point, because where is all that European capital going to flow? I think it's going to flee and it's going to go into dollar denominated assets. And I mean, that could boost up price increases in everything, but the CPI can continue to go up. Yeah. And it puts the Fed in a quagmire. So I don't know what to expect, but Bitcoin in this situation, and gold too, as gold is outperforming right now. It's just the best of all worlds for those prices, right? Wouldn't you say that gold and Bitcoin stand to benefit amongst the top asset, probably outperform everything over the next couple of years?
Yeah, I mean, I don't know about the next couple of years, very possible, but we've been saying to our clients over the last 2 weeks, really since Russia went in, the only things to us that I feel comfortable owning, the only thing I own that I feel comfortable owning or adding to personally, in terms of owning at the moment, is really comfortable, at least. Let me put it that way. The only things I have a high degree of comfort owning, because I still do own other things, are dollars, gold, Bitcoin, and it's probably in order of gold. Probably gold, dollars, Bitcoin, just based on some of the near term, some of the near term correlations between Bitcoin and tech and risk assets broadly. I think that correlation it started to break a little bit last week. I think it's going to continue to break, the correlation between Bitcoin and big tech over time. The fact that you started to see that relationship break down a little bit last week, I thought was a potentially important sign. We'll see if we get some follow through. But yeah, I agree. I mean, there's just, it's been very interesting so far this week. U.S. Treasury long bonds have gotten hammered, which for all of my career up until March 2020, arguably, were when you had a risk off like this, when you had a crisis like this, the world flocked into long dated treasuries. They're not going there. There's an issue. So it's a pretty unique time.
Switching gears, this is there is no segue here, but what if the Russian or the Ukrainian situation ends sooner rather than later? I think everyone's kind of pricing in a quagmire that's going to take 6 months, a year, maybe 2 years or something like that. What happens if, I just saw today that Zelensky is willing to talk, maybe make some concessions on his hard stance on the NATO stuff. So what if, a week or two from now, there is some sort of deal on the table and markets are completely on the wrong side of this trade. And in the meantime, right, we have also been talking to Venezuela and doing this Iranian deal. Like, what happens if in 2 weeks from now, we're, instead of facing a shortage of oil, we're facing the prospect of huge oil surge in production right as everything's wrapping up?
Yeah, I think from a tactical perspective, that kind of thing is very possible, right? Where you can get some sort of de-escalation resolution favorable to both sides. You take the war premium out of commodities, broadly speaking. I think oil probably falls the most in that case, but I think gold would fall too. You probably get growth stocks and stocks broadly in the U.S. to rise. Tactically, I would expect that sort of unwind to happen. Now, from a intermediate terms, I think that would be relatively brief in terms of that unwind. It could be sharp, but I think it'll be brief. And the reason I think that is think about what we're saying here. Russia went into NATO, said we're going to put them in NATO. Russia said no, and Russia won. What we will be seeing is a mark to market of relative global power levels, because I don't think there's going to be any de-escalation without Russia getting what they want on this. At least Putin's been pretty clear about that. And Zelensky has said, okay, in the comments today, we're willing to go, we're willing to be neutral. I'll sign that. That's fine. When you see signs that the United States, I mean, we have been actively trying to upset or undermine the Venezuelan government, the Venezuelan regime for 20 years, 10 years. We have been actively trying to undermine, hurt, sanction the Iranian government for 40 years. So in the U.S. government, who consensus has all the, king dollar, hashtag America, the dollar's king dollar. Why is king dollar panhandling for oil in Venezuela? Why is king dollar panhandling for oil in Iran? And again, I don't mean to be so harsh, but I think it's important we take a step back to see the big picture, which is this event over the last 2 weeks is showing a change in relative global power levels, which was Putin's entire point. You couldn't survive 2 weeks without going to Iran, without going to Venezuela, who, by the way, are Russian client states in both cases. I mean, I would have loved to have been a fly on the wall for that. We go to the Saudis, and what the Saudis tell us, don't bother. We're good. We're going to stick with the agreement. All right. So there's away from the tactical unwind, which I agree you could see. I think there is, again, pointing to this important secular change that just happened that I don't think, again, because everyone's understandably trying to manage their risk, their positions, things are moving around. I mean, if you don't manage that risk in the very short term with these movements, you get carried out. You're not going to get to see the intermediate term. But I think once things settle down, if we do get a de-escalation, we get this unwind, people are, they're going to sell oil and they're going to buy stocks and they're going to sell gold. And they're going to sit there and go, wait a second, like whatever we thought leverage we had 3 weeks ago, we need to mark that amount of leverage we have down by, I don't know, 20%, 30%, 40%, whatever, relative power levels. And you say, okay, Eurasia is much more influential. What does that mean? America all of a sudden realizes, oh God, this whole green thing is, the wrong direction. And you start seeing reshoring, reinvestment, reindustrialization in America accelerated meaningfully. Well, none of that can happen with the dollar system as it's structured. None of it. Our job is to run deficits, supply dollars. That's it. So if we're going to do these things that have to address these weaknesses that have been exposed by the last 2 weeks, right? The whole, we're going to reshore, or I'm so angry we have no leverage to address what Putin's doing, and the dollar's going to be reserve status. The post $71 system as structured is an asset for America. Those are fundamentally mutually exclusive positions. You have to change the dollar system if you want to address the weaknesses and the imbalances that have been exposed over the last 2 weeks, 3 weeks. And I think we will start to do that, right? So we'll start to see things like, hey, President Biden, $500 billion stimulus for a fast track for a semiconductor industry. Where are we going to get the money? Fed's going to print it all. President Biden, $500 billion stimulus for energy infrastructure and pipelines. Where are we going to get the money? Fed's going to print it all. Now, maybe we pull back on some defense stuff to net it out. But again, these are things that the dollar system post 71 was, you guys make the stuff, we'll buy it from you, and then you recycle the dollars. And this, to address the issues that have been revealed over the last 2-3 weeks, that we can't, Putin's got us by the short hairs. We can't cut out his oil without collapsing our own system. To address that issue and to address it with China, which we haven't even touched on yet, the dollar system has to be fundamentally reordered. And I think this is understood, at least in certain circles in Washington and elsewhere around the world. And these things, and that's when I say, tactically, you get this unwind. But as markets sort of settle down and go, oh God, I don't want to sell oil. I need to buy oil. I don't want to sell gold. I need to buy gold. I don't want to sell Bitcoin. I want to buy Bitcoin. I don't want to sell, and I want to buy American industrials because they're going to be building a bunch of this stuff. So the thing you want to sell in that case is, oh God, I got to get out of bonds. They're going to get, not that they'll get beat up on a nominal basis. I don't think they will. But think if you own a bond fund and the Biden administration starts addressing, printing money to address these very real geostrategic issues that were just revealed, the bond market's expecting transitory CPI. What Biden will be announcing is CPI is not going to be 7.5% this year going to 2. It's going to be 7.5 going to 10 for the next 5 years. And the bond market is going to go, oh God, it'll be like the E-Trade baby going like throwing up on itself. And of course, the problem is that the sovereign balance sheet of the United States can't afford more than probably 3%, maybe 4 if we're really lucky, right? Every 100 basis points of interest rate is pro forma 9% of tax receipts. And that assumes tax receipts, which are highly interest rate sensitive, don't fall as rates rise. So it's probably more like pro forma 10 to 12% for every 100 basis points, rising non-linearly as rates rise. And so what's that mean? That means to finance this stuff, the Fed's going to have to cap yields. It's just, you basically will be moving to a wartime footing after the war. And so I think we're in for a very highly inflationary, secularly, structurally, 5-10 years.
Well, what would you say, which price is more accurate, the oil price or the bond market?
Oil. Oil's got a low stock to flow ratio. Oil is needed. There's only so many places you can store oil. So that's why I say you have the low stock to flow ratio. You can only have so many derivatives to influence its price. The bond market, the Fed's balance sheet going from 3 to 9 over the last 2 years, 3 trillion, 9 trillion, 4 trillion to 9 trillion over the last 2 years. There's a non-economic buyer there. Where's he getting his capital? Printing press. To me, I don't know how much that has helped bond prices, but to me, it's strange credulity to say that the Fed's buying of $5 trillion in bonds over the last 2 years has not helped bond prices. To me, and if you say, okay, it hasn't helped it because the world would have crashed and everyone would have bought bonds. Yeah, but that ignores, again, the second order effect of you need stocks to go up to have the tax receipts to pay the interest on those bonds and. So there's a little bit of this, chicken and egg problem. But I think if you X out the war premium in oil, I think oil was up 100% before Putin really started rattling any sabers, up 100% year over year, right? It had gone from 45 to 85. So whatever, 80%. So I think oil's a better I know to hedge my inflation, I'd much rather own oil than bonds, wouldn't you?
Oh yeah. I asked because the bond market is the deepest, most sophisticated market out there, even though oil is obviously very deep and very sophisticated. But yeah, it's an interesting duel there. Which price is actually the smart money and which price is kind of short term? Because oil price does remind me a lot of 2008. If you look at the chart, right, the 2008 financial crisis, oil goes through the roof, which is right around where we're at today, actually. And then we had a precipitous drop. And I've been an actual oil bear, and I've been on the wrong side of that trade for now 2 years since Corona. But I think if you look at like the total amount of oil used in the world pre-Corona, it was around 100 million barrels a day, and now it's 96. It hasn't recovered. The U.S. has spare capacity that it can bring back online if the ESG people just get out of the way. So I tend to think the opposite way. I tend to think that the bond market is more correct, and the oil is just in a blow off top right now. So what are your thoughts on that?
The thing for me is like I said, I think it could be in a blow off, a blow off top related to the war premium that could reverse in the short run due to, if you get a de-escalation. If we don't get a de-escalation, it's going higher, in my view. The thing that is very different than 2008 is the U.S.'s sovereign balance sheet. I want to say when oil crashed, then we had the nasty recession, because of the nasty recession, the great financial crisis, U.S. debt to GDP was, I want to say 60%, maybe 70%. It's 122% now. And U.S. debt to GDP or deficit as a percent of GDP then was probably 2% in 08. It's 12. at the end of last year. And last three recessions, you've had debt deficit as a percent of GDP has risen 300 at the low end, 1,000 basis points of GDP at the high end, right? So you'll be looking at deficit as a percent of GDP going from 12 to 15 to 22% of GDP. So 15% of GDP is 3.3 trillion in deficits, and 22 is 4.5 trillion in deficits if we have another recession caused by oil. And that's where it gets into this dynamic of, okay, let's say oil does cause this recession. US, this balance sheet, this fiscal issue, how do we resolve this? And who buys 4.4 trillion? Who buys 3.3 trillion in treasuries? Are the Russians? Chinese? No. I mean, the Americans just told people FX reserves are not money good. They just told the whole world we're sanctioning Russian FX reserves. Don't buy them. So now, who's going to buy those FX reserves? It's the Fed with printed money. And that's where I think, we're getting into this weird time where the model of the last 40 years is breaking in real time. This is something, this is all I'm doing is looking at America and just taking away the American flag off the masthead. Like if this was Turkey we were describing, another twin deficit nation, this would be hard, when Turkey has a recession with a twin deficit, Turkish bonds sell off, the currency goes down, right? In dollar term, dollars go up against the Turkish lira, like we saw last year. Same thing with Argentina. It's simply, again, that, I think I said to someone earlier today was like, look, there's a great there's a great piece of work that was done by Hirschman Capital, citing Rogoff and Reinhardt's work of 8 or 9 years ago in the sovereign debt. And in summer 2020, he said, look, over the last 120 years, there've been I don't know, 100 and how many was it? I guess it was 53 episodes maybe over the last 120 years where a nation's debt to GDP got to 130%. 98% of those were resolved via high inflation or hyperinflation, basically restructuring the debt, lowering the debt via high or hyperinflation. And so you have on one side this 98% chance, but that's what's going to happen. And we started to see it in 2021, and a 2% chance it won't. And everybody's betting on the 2% and pointing at Japan going, well, Japan didn't, so we won't. But Japan's literally 180 degrees opposite setup of the US. So it's, I think we're going to get a recession given what oil's already done. But again, then I think it's critical to look at the second derivative that nobody's looking at, which is U.S. sovereign balance sheet is not where it was in 2014, in 2008, in 2000. I mean, in 98, when Russia defaulted and almost collapsed the system here, the U.S. was running surpluses. We literally were running, the government was borrowing nothing. They were running a surplus, and it still was nearly enough to collapse the system. So I just think it's the second derivative of the sovereign balance sheet of the U.S. that is really underappreciated.
I have a quick comment, and then I'll pass it off to CK because I know he's been chomping at the bit here. Out of those 53, how many were global reserve currencies?
I believe the UK went through it. I'd have to double check the data, but if you look at post World War I, really to me the world looks a lot like post World War I in some facets. We're in a global sovereign debt bubble. We had a stock bubble, kicked it upstairs the banking system, housing bubble, kicked it upstairs the sovereign debt. There's nowhere else to kick a sovereign debt level other than the currency. And you say Europe had I would say the last global sovereign debt bubble was after World War I. UK held on for the longest as global reserve currency, but it required unemployment at 8 to 10% for 10 years before they finally devalued. There's no political will here to set that type of austerity. Again, you would have to slash defense, you'd have to slash entitlements, you'd have to slash probably Treasury stimulus. So you would again, given the complexity of the system now versus then, I don't think that's possible. And even then, they eventually devalued the pound. significantly. They eventually ended their reserve currency role. And by 1939, when they went to war with Germany, my understanding is the Americans would not accept the British pound in the Lend-Lease program, only dollars or gold. So the Americans, the creditor, refused the global reserve currency with a 300-year history, 250-year history, in war, our best friend, no less. So I think, now to your point, most of them were not the global reserve currency. That has clearly bought us a lot of time. The $64,000 question is, how much more time does it buy us? And I think that then ties into some of the dynamics we're seeing geopolitically, oil, balance sheet, et cetera.
So, Luke, I mean, as listening to you, really at the heart of what you are articulating is, a shift in global trust and how trust is allocated. And, you're talking about on different time scales that trust really changing and then behavior changing, kind of geopolitically. I see, and we've talked about on this show, a much more localized world, which you kind of talked about is, the Fed will start financing, building out chip foundries and infrastructure and oil capacity, et cetera. Can you talk a little bit about a world on this kind of like localization standard? And, is there an opportunity for something like a CBDC to come in? People talk about where, China's CBDC comes into play here, or I mean, again, our thesis here is that it's really a dollar and Bitcoin game to play despite localization. It seems as though there's some alignment with the thesis here that, kind of the global world order is shaking up a little bit, and there's this opportunity to kind of grab that pristine spot as like this global reserve. Want to pass it back to you.
Sure. Yeah, I mean, if you think about Bitcoin, right? To me, one of the message of Bitcoin is energy is more important than fiat, right? I mean, at its core, that's what proof of work is, right? Energy is the real value, not whatever I say it is, right? And so I think this breakdown in the rules-based global order as it's been structured for the last 30, 40 years in particular, I think is really just a bunch of nations acting in their own mostly enlightened self-interest, which is to say, when you go back 4 years, you can see Kyle Bass on CNBC saying, look, the Chinese buy a lot of oil and it grows every year, and oil's prices are going up, and oil's only priced in dollars. And so if we can just squeeze the amount of oil price higher, then the Chinese are going to run out of dollars, and they're going to have a currency crisis like the Southeast Asian countries did in the late 90s. And the Chinese are just going, yeah, no, that's not acceptable to us. And we can think whatever we want about the CCP, and I'm not necessarily a big fan of some of the things, all those things, doesn't matter. They're not going to sit around and let, something like that, be choked off. Europeans are in the same position. The Japanese are in the same position. And so they need to find this. I think this relocalization, this breakup of the rules-based globalization of the last 30, 40 years is really a matter of national security to be able to print their own currencies for oil and energy and commodities that they're all short, but doing so in a way that doesn't require them to do what the Americans did. What we chose to do was to basically send all of our factories to low-cost countries to create the deficits, right? We had to dishoard ourselves of factories to do this. They don't want to do that. That's politically unacceptable for, in particular, Japan, China, Europe. So they're not going to do that. So, okay, you have to settle in something. They don't, their domestic internet, sovereign bond markets aren't big enough, aren't trusted enough. There's rule of law issues. There's deficit issues relative to what I just described in terms of deindustrialization that has not happened there for political reasons. And so you have to find a neutral reserve asset. You have to settle in something that everybody trusts. And so I think your point of trust is a really good one. And so then it gets to, okay, what do they trust? You've got gold with a 5,000-year history, and that's clearly they're moving toward that. And I think Bitcoin can work in that way. If it can work in that way, full stop. The question then is how does that path look, given that is not where the established authorities are moving at the moment? They're moving toward gold. And how does that, can that be then gamed or forced or encouraged by American authorities, which may have an interest in doing that, depending on situation and events.
Yeah, very interesting. One of my critiques of the gold standard, I mean, I'm coming from a gold bug world. I was a gold bug until I became a Bitcoiner, but is that there is, gold is captured. It's sitting at the central banks. And why, if someone is so mad at the United States for freezing their reserves, their foreign reserves right now, what's to stop the United States from freezing their gold in New York City, right? And so I think that there are a lot of big hurdles to the gold system. What's your response to that?
Yeah, well, it's absolutely an issue, right? I think ultimately, when you see U.S. senators today saying, we should tamp down on Russia's gold. Number one, most of Russia's gold's in Russia, so good luck with that. But these senators are encouraging a run on the gold of the New York Fed. I mean, again, the number of actors, people say, well, it's only bad actors. The number of countries that have not been considered bad actors by the United States at some point in the last 80 years is exceedingly short. Exceedingly, like I just said, we stuck it to the Brits in World War II. We don't want your reserve currency sterling, gold or dollars, right? But everybody, it's a very short list of countries. And so when the U.S. does things like this, which is an absolute risk with gold, and it's a risk for investors in terms of paper proxies for gold, most of which have some version of cash settlement language in them, force majeure language. If you don't hold it, you don't own it. Full stop. And so I think you're likely to see, basically a version of global, if you don't hold it, you don't own it, evolving in coming years as a result of what we've seen in the last 2 weeks.
I agree.
Yeah.
Yeah. I mean, I think that's the lesson right now. So the lesson is, if you don't hold it, you don't own it. This conversation makes me bullish on Bitcoin because it's the easiest thing for anyone to hold. And I do think it's really a global trust shift that it comes down to. Luke, we have to wrap up. I want to give you back the mic to close out this conversation. And I want to say thank you so much for the time. Really appreciate your insights. And I found this incredibly valuable.
Well, thanks for having me on. It was great to be here. Enjoyed catching up, and wish you all the best of luck.
I guess, can you tell the audience where they can learn more about you? Sure. And yeah.
Absolutely. It's you check us out at fftt-llc.com. It gives updates in terms of what we're up to, some of our research product offerings ranging from institutional to mass market product offerings. And I've got a pretty active Twitter feed at Luke Gromen, LukeGromen, for you can kind of see ongoing thoughts there as well.
Must follow Twitter account, that's for sure.
Thank you.
All right, awesome. Well, again, Luke, thank you so much. To all the Bitcoiners out there, make sure to follow Luke, make sure to follow me, make sure to follow Ansel, make sure to subscribe to the show, and passing it back over to Q. Thanks again, Luke. Peace.
Right. Thanks, guys.
I was trying to tell CK to tell you guys to follow me too, but we're going to cut to a quick commercial break, and then we're going to hang out for a little bit until a new episode of The Breakup with Nolan. Luke, thank you so much. That was awesome. I learned a ton. So stick around, guys, and we'll be back shortly. Welcome back, guys. Thank you for sticking around. It's been a jam-packed episode. Hope you've been learning a ton because we're ready for the main course now. Nolan, how are you doing? Yeah, we should probably unmute you and then I'll ask you how you're doing again.
I am excellent. I'm going to do one thing before I get going. I realize I didn't put my good internet on. I have my Wi-Fi.
No,
Just give me
you're
1
fine.
second.
You're fine. In the
It's not
meantime,
TV, but I
guys,
got to put it in. No, you're right. It will break. It will break. It will break. We're going to go with it. We're going to see
we're
how
going
goes.
with it. All right. Before Nolan does dive full head first into the newest episode of the Breakup, I just want to remind everyone, use code 10% off to get use code YTMAG to get 10% off of your Bitcoin conference tickets. Ansel will be there. CK will be there. I'll be there, but at this point, I'm not convinced any of you guys care that I'll be there. So I'm going to try to show the fact that someone like Gary Leland is going to be there, who definitely wants to hang out and see you guys. Use code YTMAG, get 10% off. That's it. That's my bit. Nolan, up to you now. Carry us home.
Excellent. So today's episode, in the Breakup, it's all about contrasting the fiat standard with the Bitcoin standard. We talk a lot about how the process of these two forces coming into contact looks a little like World War III. And a lot of people are talking about World War III these days. It's in the air. We brought it up here first, I think, of all the public media around there and crypto and Bitcoin that first mentioned World War III. It might have been on this show that you heard it first. So we were a little ahead of the time. And I think we can be ahead of the times again. And that's about the end of World War III. How do we get out of the trouble that we're in? The show compares and contrasts the fiat standard with the Bitcoin standard and tries to bring some sense of clarity on where we can head. And I think we might be there. We remember in wars, big dates, big events sort of turn the tide. They shift the narrative. They change the way we focus on it. Of course, in World War II, we had Pearl Harbor, and Pearl Harbor motivated Americans to be involved in the war and got everyone on the same team. And who can forget the real big strategy win, the deployment, the unveiling of the plan for the Allies to win World War II happened on D-Day. Where were they going to get into Europe? What was going to happen? And then, of course, we've told millions of stories for an entire generation about the heroes of D-Day and everything that came after. VE Day, another thing about a year later, a year and a half later, they had the nuclear bomb about a year and 3 months after D-Day. But all of those come with their own legacies and are really part of what happened after the war in a lot of ways. Their story continued. But World War II itself, the pivotal dates, I don't think anyone would make a big fuss if I said Pearl Harbor and D-Day from an American perspective were the two most important days. And when I look at what's going on in the environment today, I see the possibility of a real watershed moment for Bitcoin in the coming days when I see all of what I call persuasion or priming or signaling around the White House crypto plan. The White House crypto plan, if you weren't aware, is apparently been cooked up for a few months now, been getting cooked up for a few months now. It looks like what it's going to be is they're going to direct federal agencies to examine the potential regulatory changes, as well as national security and economic impact of digital assets. And what you've been seeing as far as persuasion and priming the public is the sanction talk. Even today, we had the new FinCEN acting director, Him Das, who said that although they don't see it necessarily in sanctions, it can happen, and they're going to close the door. One of the worries that a lot of Bitcoiners have is that within all of this strategy, there will be an ESG component, environmental sustainable governance. And that means that proof of work will be targeted as opposed to the other protocols using less energy called proof of stake. And a lot of Bitcoiners believe, and I think that in some senses, we can see the priming around this distinction in the market. It doesn't mean it's going to happen. What this show is all based on is if that is a reality. If the White House crypto plan, which everyone says Biden might sign this week, unveils certain things about Bitcoin that make American Bitcoin holders' relationship with America a little more tenuous, a little more difficult. In the same way that Pearl Harbor all of a sudden showed that there was this not safe harbor, there was a not safe place for Americans to be at that moment, and that fear spread. And of course, we had the famous speech from Roosevelt, the only thing to fear is fear itself. And what ended up happening with that is, because Americans knew there wasn't this Pacific Fleet anymore, there wasn't this stability, they had to change plans. They couldn't just be an observer of the war, supplying munitions and armaments. When Roosevelt came to Congress to talk about Pearl Harbor, what he did was offered a plan, which were the beginnings of D-Day. And we're going to talk about our version of D-Day today, in case that happens. If there is something like this, what does D-Day look like for Bitcoiners? Is there a B-Day? And what goes into the B-Day? So we're going to talk about that today. And because some of us come from the 80s, we remember that war doesn't have to necessarily be X's and O's and difficult stuff. Our war is just Pac-Man. So you're going to see our strategic D-Day board. This is us storming the beach. It's the Bitcoin beach. It's the one in El Salvador, but it's a great beach. And it's a lot like the beaches that those heroes stormed in World War II. So what it's all about. First of all, the plan, one of the things that I think is a bit ridiculous is this CBDC piece. I just want to get that out of the way first. This is where I can see this whole plan from the White House really falling flat. What I'm saying right now, it might not be a Pearl Harbor, and this might be a reason. But even if it fails to be catastrophic for Bitcoiners, it might be so laughable and so stupid that it might just drive Bitcoiners to completely give up on any semblance of American leadership and regulation and just hit the gas and go and develop stuff. So one of the things I find hilarious with these CBDCs is that somehow people have it in their mind that it's going to curb demand for Bitcoin and cryptocurrencies. Like Eric Wall put it great, oh, you like speculative coins that can maybe go up 1,000%. Well, I've got one that still goes down 5%, but it's digital, it's great. You see, even China, they bet that their CBDC would curb demand and would be popular. And they really believe that. And you hear it a lot. Well, if the Federal Reserve launches a CBDC, well, everyone's going to go to that. They're not going to want Bitcoin. Of course, we're talking about collateral and the use of it. So we'll see. But if that is the plan, then I think most Americans will say, not a big deal, nothing to worry about. If it does focus on energy, if Bitcoiners do feel threatened, if the same kind of thing happened with gold in World War II, where FDR stopped the convertibility of gold back then too. So he said, you can't, it's almost like capital controls. You weren't able to sell your gold in the market to get money, to be rich and do stuff. There was a fixed exchange rate. And even if there was an exchange rate, it was stopped for quite a while. So what ends up happening is, if this scenario happens and American Bitcoiners realize that some of the energy stuff isn't there, that this ESG piece is going to make the ability for Bitcoin to grow in America questionable, then how does Bitcoin respond to this White House proclamation and law, and how does it win the war in the end? How do we get out of it, right? What's the B-Day look like? So I think I have the recipe for the B-Day. We've been given an amazing and extraordinary opportunity here with the combination of failures in healthcare and energy policy that we find ourselves in today in 2022. Bitcoin might be able to withstand any attack from the White House and actually pivot to grab huge pillars of the global economy and tuck them under itself in order to propagate itself into the future, which is what a B-Day would look like, our version of the D-Day, our version of Bitcoiners storming a beach. So the first one you have right here, I think has been done. We talked about priming and persuasion before, about what a lot of the FinCEN is doing, saying, well, sanctions, you're probably going to hear about in the crypto law. You hear every article that Bloomberg has mentioned, White House crypto plan, sanctions Russia. This is what I mean by priming. So one of the things Bitcoiners did to prime the world through the years is start talking about eating habits, in particular, healthy eating habits. Add to that weightlifting and all of that other stuff. When you contrast that in the health plan that we see coming from our government, a Freedom of Information request just the other day from Health Services said that hundreds of news organizations were paid by the federal government to advertise vaccines as part of a comprehensive media campaign. So a Freedom of Information Act request was made, and we found out, I don't know the details of the numbers, but what it looks like is the federal government used tax dollars to leverage the CDC to promote and buy advertising space to let people know about the vaccines and that they should take them and all this other stuff. So the problem here is not to say vaccines good, vaccines bad. It's that the amount of work that was done in order to promote a version of health, I'm not saying that vaccines were a bad idea, not what we're saying here. It's the idea that persuasion was used by what amounts to a body that's supposed to be playing it even, looking up the middle, looking for any other potential side effect. And we saw in particular with the Pfizer vaccine, they finally released some of the data about the numerous side effects they were, and it was nothing like a lot of people had initially understood. Once again, we're not saying vaccines bad, vaccines good. This is not a show about vaccines at all. It's about what I think we can all recognize, this complete collapse in trust, particularly around healthcare, around COVID, advice coming from governments, and it's, we can say, collusion with media entities in order to sing a very similar song all across the board. That might have been deliberate, right? We can all imagine that it would make sense for there to be a common front in what was perceived as an important war on COVID. So there's nothing necessarily wrong with that type of coordination. I think in an emergency, you want government bodies to coordinate. This is something else. This is something else entirely. This is manipulation and persuasion. An open field to private companies, of course, who can advertise, but the balance gets tipped too far when government, I think anyway, when government colludes with the actual producers of a product and go and sell it. Now, I mention all of this not really to talk about the ability or the inability of our current healthcare system to meet our needs. What I'm saying is Bitcoiners already can attack this front on the beach, because Bitcoiners have been, instead of worrying about drugs in the pharmaceutical industry, have been 100% focused on personal health. That is eating right, that is exercising correctly, lifting weights, doing the right amount of cardiovascular exercise. And all of these things combined means that Bitcoin has already developed a culture around health that can actually solve a lot of problems that probably can scale throughout the entire country. So when you see this decrepit institution of American healthcare constantly charging too much, constantly totally in the bag with insurance companies, who are now also in the bag with media companies, who are also in the bag with news companies, and you realize that health is probably not the goal here, probably not the goal. Everyone trying to make some money, which is understandable. But on the other side, Bitcoiners have worked hard on this. And I think most Bitcoiners have found their way to this healthy living, no seed oils, which might be incorrect, but it looks more and more like Bitcoiners are onto something with the amount of shared information around the healthcare space, in particular, how to live healthy. Now, another opening here on the beach, and we bring it up a lot on this show, is energy. Mayor Pete, they call him Mayor Pete, he's the Secretary of Transportation in the United States, ran for the Democrat nomination, said yesterday, when asked about gas prices and what they're going to do about it, Mayor Pete said that if people struggling with rising gas prices should solve their issues by buying electric cars. Now, I used to say as a joke that that would be the dem answer to, oh, you know, we can't get away from gas. We'll just buy a Tesla. What are you talking about? It used to be a joke to say it as an answer, but he actually said it out loud. In related news, and this was what Clay Travis said, in related news, homeless people should also just buy houses so they're not homeless any longer. And everyone now today is comparing Mayor Pete to Marie Antoinette, the let them eat cake, let them eat cake. So when we look at energy and the ability to pivot and this opportunity to pivot to electric vehicles, we see there's an appetite there. We see there's an appetite in Americans, but the policy isn't necessarily there. It is just go buy one. Well, we've brought him up on the show several times, Onye Nkuzi. He's a Nigerian and probably has some of the hottest takes on Nigerian finance, Nigerian politics, and is a Bitcoiner. What Onye asks is, Nigerians based in Nigeria must look at the crisis differently. This is about the energy now, the same thing that Buttigieg was asked about. North American and European policymakers are rightly obsessed with gasoline pump prices in the wake of the Russia-Ukraine war and resultant Western sanctions. They are looking out for their consumers to limit their pain at the pump. But who is looking out for the African consumer? Nobody. Do you understand that we are potentially facing a decade worse than the 1980s across Africa, a decade of economic stagnation? If you even look at US foreign policy on energy right now, the plan seems to be that we're not going to deal with Russia and Belarus, but that we're going to replace those two with the glorious nations of Iran and Venezuela. But the problem there is previous sanctions have actually gutted their capacity. They can't actually drill the oil. It's not necessarily available. It's in the ground, but it's not necessarily available. So those two things combined, no one's looking at Africa. American policy is probably beyond all expectations and beyond all reason not going to pivot. We've seen opportunity after opportunity for the industry to pivot, and it simply hasn't happened yet. We see today that we can probably end, they say we can end a lot of the trouble that we've got with energy by just building nuclear reactors. Mark Andreessen, who I've mentioned a few times, points this out today. This is a Citibank report. Citibank, recent events in Europe will significantly increase the likelihood of defense's inclusion in the EU's social taxonomy. Social taxonomy, that's ESG, that's the social part, right? So ESG. What Citibank is saying, Mark Andreessen points out, he says the plan. ESG funds will invest in defense companies to make the weapons required to fight wars with hostile regimes we buy energy from, because ESG funds won't invest in energy companies. Can you believe that? So what he's saying is they won't invest in energy companies in America, for example. They won't build a nuclear reactor, but they'll buy and now it's going to fit into their taxonomy, they say, their taxonomy, that they can buy weapons, they can invest in weapons companies to go fight wars in order to not buy clean energy so that they can continue to buy the energy from the countries they're fighting wars with. That's actually the plan. That's the plan. That's the plan. So if that's the plan, we add health, there's no plan. It's get another shot, buy another thing. We get energy, it's war here, maybe this, who cares about Africa? What are we gonna do? I come back to the point that if any American, if this White House crypto plan is like a Pearl Harbor and we realize there is no safe harbor, we are not safe in the safe harbors of America, and that energy policy will not allow Bitcoin to spread its wings, the only answer might be to go to Africa, North Africa, the deserts, where it doesn't matter, there's no people, and you can put small modular nuclear reactors in, and Bitcoiners can actually terraform the land there. All of this energy, of course, could then go into these countries that have nothing right now. They don't have energy, and they're not going to be able to buy the oil and gas, and it's not going to get shipped to them. So what are they supposed to do? Like Onye said, it can be worse than the 1980s. Now, 1980s in Africa did not have Pac-Man. It was not fun. It was terrible. And unless we're okay with them going back to what Onye says is entirely possible, we've got to come up with a better strategy. And when I see the people that stormed the beach at Normandy, it was Canadians and Americans. But now when I look at the new beaches, the Bitcoin beach, and when I look at the Gold Coast in Africa and the amount, the sheer number of Bitcoin holders in Nigeria, because they understood the failures of their central bank long before Americans did. So they got a bit of a help here. More per capita Bitcoin holders were forced over there into Bitcoin. It wasn't just, oh, this looks cool, my friend told me about it on Twitter, what is it? There was no choice. This has already been used in Nigeria for years now to combat the ill effects, the unintended consequences of failed central planning. And what you have over there now is a whole audience of people that would see Bitcoin as a safe harbor and certainly would have no problem with the beautiful energy that Bitcoin miners could help create in their areas. So right away, we can see that any B-Day plan really can be the deployment, just like we saw mining hash rate shift from China to America in a few months. I'm not saying we're going to go to Africa and build this kind of capacity, but the minute we get on those shores, the minute that you're in a place where you don't have to worry about a huge government like the United States federal government trying to solve its super complicated policy requirements, balancing sanctions, Russia, Venezuela, all these different places. If you go to a place that's a lot simpler and you just build a nuclear reactor and you show that the model works, you might actually have a B-day. You might actually have a point at which we see that citadels can form and free cities can actually just pop out of the ground wherever one of these things gets planted, and the Bitcoiners that are there can actually start running what amount to safe harbors for Bitcoiners all around the world. And an interesting thing, you look at these international organizations, the UN, Alex Gladstein writes that one of the things interesting about, you got the UN, Wall Street, information asymmetry, credentialism. Alex Gladstein writes, who was supposed to be on the show yesterday, but we'll have him on again soon. One good thing is the Bitcoin community tends to be very patient and helpful with newcomers who genuinely want to learn about how it all works. This dynamic will be on display over the next few years and is totally the opposite of fiat experts who tend to be obfuscatory and territorial. And he goes on to remind us who's in the current UN Human Rights Council. It's Eritrea, it's Cuba, it's Venezuela, it's Russia, and it's China. So you've got these institutions that are not going to tell you the truth. This is not a human rights council. It's not. It can't be. It's impossible. In the same way that fiat experts can't really be interested in helping you save money, and it's impossible. That's where the obfuscation and territoriality comes from. So we see that if these two beaches are stormed, we come to another ghost, another potential win. And Zoltan Pozsar. If you don't know who Zoltan Pozsar is, we've got Pomp, who just reminded us that he's essentially the epitome of the insider or establishment banker. He is generally regarded as the expert on central bank lending rates, the repo and the overnight rates, and everything that's short-term interest rates. He was at Credit Suisse, the Treasury Department. This guy's all up and down New York City and couldn't be more connected. Whenever people in the bank, I worked in Wall Street while I was at CoinDesk in New York City and spending a lot of time in the New York Stock Exchange and all these places with all kinds of Wall Street people. And I tend to, people, I'm the director of this thing. I'd always say, so you're a banky whatever. I just gave them all the same title, banky whatevers, right? Because it's too complicated. This thing and that thing, fixed income, banky whatever. Everybody was banky whatever. Everybody is banky whatever in that whole industry, except Zoltan. He's a real guy. You can't say banky whatever. This guy actually, as complicated as this crazy macro thing is, this is actually a person who can keep that information in their head and make some form of sense about it. So he wrote a note that is one of the most amazing things I've ever seen. And to me says, if we actually get this B-Day, if we take energy and actually fuse Bitcoin with nuclear reactors and own the energy and close the circle, something amazing can happen. And Zoltan underlines it here. Zoltan says, we are witnessing the birth of Bretton Woods III. Bretton Woods II was the order created for the US dollar out of World War II. We are witnessing the birth of Bretton Woods III, a new world monetary order centered around commodity-based currencies in the East that will likely weaken the Eurodollar system and also contribute to inflationary forces in the West. A crisis is unfolding, a crisis in commodities. Commodities are collateral, and collateral is money. And this crisis is all about the rising allure of outside money over inside money. Bretton Woods II was built on inside money, and its foundations crumbled a week ago when the G7 seized Russia's FX reserves. He goes on to talk about freight rates, the geo-monetary dynamics, and then finishes his note with this. Do you see what I see? Do you see inflation? When the crisis and war is over, the US dollar should be much weaker. And on the flip side, the Chinese renminbi much stronger, backed by a basket of commodities. After this war is over, money will never be the same again. And if Bitcoin still exists by then, it probably will benefit. That's his last line in it. That's the last line he had. Now, he mentioned the renminbi, and this is where the Bitcoin beach the B-Day, the D-Day equivalent becomes important. He mentioned the renminbi as this commodity-based currency. Something else has to happen for that to actually be a viable solution to solve World War III, US and China dollar. And this is from Michael Pettis. While the Russian sanctions will certainly increase the desire of some countries to have an alternative to the dollar, it wasn't insufficient desire that prevented the emergence of the renminbi or some other currency to be a safe haven alternative. It was the basic conditions of global reserve currency status. And he mentions how it loses the test. It might have been stable during one crisis, but for it to be an actual global reserve currency, it must have an open capital account, remove any capital controls. It's got to completely liberalize its financial system. It's got to have rule of law like Hong Kong had. It's got to have property rights for foreigners, property rights for locals. It's got to completely rehaul the system. So if America isn't in a position to do this, and the Chinese money can't, but psychologically, we all understand that a commodity-based currency is the answer. What we can start to see is that Bitcoin, nuclear-powered Bitcoin, can storm this beach and win the war and end what amounts to tyranny on the part of a lot of these lost and hopeless organizations around the world. That's the episode of The Breakup for today.
Heavy stuff, very heavy stuff, Nolan, but that was a quite the lesson as well. I'm curious, did you get a chance to see Alex Gladstein's post today from the Credit Suisse reports about just Bitcoin, Bretton Woods stuff? Okay, I'm gonna message these to you.
Please
and
do,
maybe
yeah.
we'll pick that part of the conversation up tomorrow before another episode of, actually, I won't be here for that, but we'll figure something out. In the meantime, if you haven't already, I cannot stress this enough. Use code YTMAG, get 10% off. Nolan is going to give a lesson of the breakup live. I'm putting him on the spot. It's going to happen. We're going to do it at the conference somehow, some way, maybe in like a back room somewhere, just for a few select people.
Don't we have the studio? Don't we have the studio all figured out?
Oh no, that's something else. No. But there will be a live episode of the breakup. We'll figure out a way to do that in some way, shape, or form. And we're going to let it be a very exclusive thing for maybe like 20 of you. In fact, I'll do this. The next 20 people who buy a ticket to Bitcoin 22, you DM me and you'll get an invitation to this exclusive episode of the breakup that will be filmed live. We're not going to release it for like months. That's how exclusive it's going to be. It will eventually be released. Yes, I know. Use code YTMAG, show me the receipt, and then we'll talk about getting you a ticket to that event. In the meantime, though, Nolan, how else is everything going down in some nondescript island country?
Look, we're Bitcoiners. We love our life. You know, it's chaos out there, but a lot of Bitcoiners saw this stuff coming. So we're not in Canada.
Well, I'm kind of curious your thoughts, because you touch on it briefly, just about, monetary control in this episode. And we've talked ad nauseum on this show about, some of these exchanges being pressured into shutting down accounts in Russia. Coinbase very loudly at the end of last week came out and said, we're not going to do that. And then turned around and shut down 25,000 accounts. Obviously, those of us who are true Bitcoiners don't really view Coinbase as a Bitcoin app or a Bitcoin exchange, but I'd love your thoughts on just sort of the domino and the slippery slope that we're entering. This is now an exchange shutting down access to Bitcoin as well as other cryptocurrencies. This has never been happened before.
Yeah, I think most people imagined this would be the case anyway. So I personally am not surprised.
Okay.
I for a long time have not believed this time around we're going to win this privacy battle. I think that we get the reserve currency is how I've thought about it for a long time. I think we can get there. I think we can get as far as being a safe haven and over time start breaking down some of these KYC, the whole policing aspect of the counterparty being the counterparty having legal responsibility for dealing with a sanctioned person. So I can imagine that we're going to have to play ball. The institutions are, the protocol doesn't, individuals don't, but it doesn't surprise me that Coinbase or any of the other ones would. I worked in the strategy section at Kraken, which was a small little unit that reported, directly to the CEO about all kinds of stuff. And sometimes this stuff would come to us, emergency regulatory pivots or strategies to get out of some difficult situation. And often when it came to these ones, there's not much you can do. There's just not much you can do. They have your nuts in a vice. And if you're an entity like this, you can only do what Jesse, the CEO of Kraken, said in the Canadian situation. He said, there's nothing I can do. You get your stuff and you go. That's your best bet. And I don't know if we can do it. I continue to see privacy as a service you can buy using a cryptocurrency, hopefully Bitcoin entirely, but it's not a baked in thing. It can't be. It can be. It just, the way I see the world operating over the next short term anyway, it's not going to be that case. We can take on psychologically the dollar. I don't think we can take on everything around it.
Like the whole idea or the pitch that we sometimes make in Bitcoin, where Bitcoin fixes this, Bitcoin fixes everything. We can't fix everything overnight. It's going to have to be a one at a time almost thing is what you're kind of describing.
Yeah. I think it's going to be a great hedge against inflation and all the failures of these governments. I think then it's also got the capacity to get into funding a lot more, raising money and allowing projects to work, and especially when it gets integrated with energy a lot more, you can start to see that really proliferate. But after that, it's another game, and that game will start. I think we have a chance, but lots of things have a chance in that instance, and that's where we get into the video game aspect of it. I think of Bitcoin as something outside of video games. It's not consumer technology. That it's old and that it's survived is its number one attribute, and I think that's what gets us through with some of the privacy failings that we've seen. I can live with them.
Yeah, I mean, I myself kind of applaud those exchanges that essentially said no for the time being. Their hands may be forced, as you've mentioned, but I think it sort of stays true to the idea and concept of privacy that Bitcoin was built off of. I do want to very quickly, then please nix whatever I'm saying. Matt Odell sent out a tweet that I think is just important. And the gist of it is very simple. If you do not run your own Bitcoin node, but you are interacting with the network in whatever way, you are putting that trust in whoever's node is validating your transactions. And you don't know if that individual or that entity is going to keep your information protected. They could very well and very quickly and very easily turn it over to whoever is asking for it. So it is vitally important, if you are interacting with Bitcoin on a regular basis and prioritize privacy, that you need to have your own node.
Well, I would agree 100% with that. That's the best way to say it. You can still get around this stuff. And I guess I'll go back even to this D-Day thing. If it turns out that America can't be a safe harbor because of things like this, well, then I do applaud those exchanges that will go abroad and domicile themselves elsewhere in order to have the protection against American authorities coming in. Because here's the thing, when America went and arrested Arthur Hayes, or not arrested him, but served him papers in Hong Kong, this was extraordinary. This was totally extraterritorial. He had technically no American customers, technically. Whatever they got him on, which was you had money laundering friends who used your platform and all that stuff. I don't know exactly what he did in it. So if I'm wrong, maybe he did trade off his own books and do some unscrupulous things. I don't know. I've only ever read stuff. I think the product was great, and BitMEX research continues to be some of the best out there. And Arthur Hayes is the best writer in the space, the best writer in the space. Okay, so whatever else happened with the BitMEX thing, I think you just have an American government that was extraterritorial, went to Hong Kong and did this. I don't think they're going to be able to keep doing that. That was a one-off in the first place. And if you remember when that happened, when it happened, when in 2020, when they served Ben Dillo and Arthur Hayes those papers, they also released, if you remember, Bill Barr released the same day, the guidebook on crypto prosecutions in America. And what it was an anthology of all the different prosecutions that have ever happened and the exact provision they were able to use. That's different fraud cases, different everything. It was a 70-something page compendium of the best of hits of throwing crypto people in the slammer. And I forget why I'm trying to remember right now why Arthur's was an example, but it was a new thing they got him on too. And they had to put it in there. And that's why it was all packaged up together. So on that day, a lot of people don't remember because it was just a few days before the 2020 election, and everyone was occupied and no one was paying attention to what was going on there. But it was a pretty good compendium on how to prosecute crypto people. You didn't have to, there's no wasted pages. You found your info, right? And I got this guy on this. Some of them were crazy people who did absolute scams, and all of them should definitely, absolutely 100% get in trouble. But just the coordination of it. So the Arthur Hayes thing to me was publicity and all that. You know, I was somewhat involved in some of the activities that he did to embarrass Wall Street when he hired bankers to come and protest that they were losing their jobs. They were actors, but he hired bankers and said they were losing their jobs as bankers. And they were protesting our Bitcoin stuff. But the news reported it with, they thought it was real. They didn't understand. It was a joke. They don't understand. They didn't get it was a joke. So the way he embarrassed them, and I know, you know, when I used to book them for shows in New York City, and I knew what I was getting. I knew I was getting the most irreverent person who would just laugh and mock every Wall Street person in the room. And that's what I wanted. You know, that was the ticket. So when I see what happened there, I see it more as example. I see it more as an ego thing, and they used him as a. But I don't think they'll be able to do the extraterritorial stuff in the future. I don't think the capacity is there. I don't think the rest of the world will let them do it.
Oh, hey, that makes sense, man. Guys, I think it's about that time. We say goodbye. We say thank you. Nolan, thank you so much. I will let you get back to the family. Guys, thank you for sticking around for all 3 hours today with us. It's been a jam-packed episode, a ton to learn, a ton to take away from everything that was said here. But if there's one thing you take away, and only one thing, it's that you need to be in Miami in 29 days.
Use code YTMAG, get 10% off.
That's it. That's a wrap. Stack sats and be well, guys.